This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about that ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
It's a slow Wednesday. Good morning, everyone. Tom Keene, Paul Sweeney. Special Wednesday. Fed meeting this afternoon, but before that, the CPI. Paul, rumor has it, the Fed officials already have the report.
Do they?
Yes.
So when they make their decisions,
they know the
okay.
CPI.
Right. I would like to think they would.
They've had time over the two-day meeting to tweak their view forward because they've got a front run of what we will see here at 8:30 this morning.
Yeah, it looks like, I'm just looking at the consensus numbers, Tom, CPI, ex food and energy, up 0.3% in this May period, basically in line with last period. So we'll see how it comes out.
Look at you with the numbers.
Exactly.
I'm not even looking.
Eco go, Tom. It's like it gives you everything you need to know. The Fed decision at 2 p.m. We'll get the decision. Michael McKee, we sent him on the Acela train yesterday. He's down in Washington, D.C., ready to ask some pointed questions.
We're going to get to Paul Donovan here in a moment, UBS. Paul, let me, a direct quote, Paul Sweeney, from Mr. Donovan of UBS. The fabled dot plots of policy projections will add confusion.
Oh, boy.
And that's sort of where I am. I'm not sure what happens, but do we come out of this and do we come into the press conference and out of the press conference more confused than we are right now at 7:01 Wall Street time?
We have it DOTS Go, Tom, function on your Bloomberg terminal. Dots Go. That'll give you a sense of kind of where the Fed officials are in terms of their forecast for interest rates going forward. So we'll pay attention to that. That function will get a lot of use today.
We have a spectacular guest list this morning. Eric has spent minutes on this guest list.
Exactly. Absolute
minutes. Jim Bullard will join us later on, the former president of the St. Louis Fed. We're on YouTube. Subscribe to Bloomberg Podcast. Search for Bloomberg Podcast on Apple CarPlay. If you own Apple CarPlay, you own the stock.
Oh, you have to, I would
think. Apple CarPlay had a good day yesterday.
Apple CarPlay had a good day yesterday. The Street, I think, getting a better understanding of where Apple's going to be with their AI strategy. So they're going to be there. We always knew they would be there at some point.
Thank you to Dan Ives and Gene Munster for attendance yesterday. From the Interactive Broker Studios and from Washington, with our Bloomberg Business Flash, Amy Morris.
All right, thanks, guys. Traders are rapidly unwinding bets for a rally in U.S. Treasuries ahead of today's double risk event, with the release of inflation data coming just hours before the Federal Reserve interest rate decision. And, of course, we check markets for you all day long here at Bloomberg. S&P futures up 0.1%. NASDAQ futures up 0.1%. Dow up 0.1%. You catch the trend there. 10-year yield now at 4.39%, and the 2-year yield at 4.83%. Want to check Bitcoin for you. It's up 1% now at 67,927. And the euro, which remember yesterday it was struggling, today it's up 0.2% at 107.60 against the dollar. Now, European stocks did rebound after days of political upheaval in France. Traders positioning for, of course, today's CPI print and the Federal Reserve's rate decision coming up this afternoon. And that is your Bloomberg Business Flash. Tom and Paul.
Amy Morris, thank you so much. It is that time of year, and we are very advantaged at Bloomberg with a great intern program. 32 years ago, an intern walked through the doors at UBS, and he stayed. Paul Donovan joins us now, iconic at UBS. Paul, what was your first day as an intern at UBS like? Was your head spinning?
It was. I walked into the start of one of the periodic European crises of the early 90s, the exchange rate mechanism crises. And so it was all quite a chaotic environment on the trading floor that summer.
The ERM came out quickly and suddenly. It's something to study, folks, if you're piecing together all the correlations that are out there right now. You have the sentence of the day, Paul Donovan, that the dots may provide confusion. Discuss that. Why will I be confused at 3 p.m.?
Well, look, we are in the middle of an extraordinarily complicated series of changes in the global economy, enormous structural upheaval. There are considerable disagreements between the different inflation measures about what's actually going on with U.S. inflation, lots of nuance, lots of subtlety and somehow a black smudge on the middle of a chart is going to tell you everything you need to know. This is absurd. The problem with the dots has always been there is no probability factored in. It's a single point on a chart. There is no risk. There's no nuance around it. So somebody who is 51% convinced that they're going to cut rates twice and 49% convinced they're going to cut rates 3 times is registered as an absolute definite, we're going to cut twice. That's the problem with the dot plot. It doesn't convey the extraordinary complexity of policy decisions today.
So, I mean, there's a lot of folks out there, Paul, that feel like the Fed is behind the curve here, that some of the real-time economic data says that inflation is, in fact, at the point where the Fed can start cutting rates. And we've even seen the ECB cut rates, the Bank of Canada. Do you think the U.S. Federal Reserve is behind the curve here?
Well, look, if I was allowed to run the Fed, which, because I'm an economist, apparently is no longer fashionable, and because I'm British, they won't let me. But if I was allowed to run the Fed, yes, I'd be cutting by now.
Hold on, Paul. That was some British shade there.
Yeah,
I mean, you see the level of shade from Mr. Donovan.
Yep.
Continue, Paul.
But look, the U.S. inflation rate is the same as the European. It's the same as the UK inflation rate if you measure it the right way. If you look on the harmonized inflation measure, like for like, you've got the same inflation. The inflation pressures in the States that do exist in the headline CPI, the number we're about to get, these are largely fantasy prices. Owner's equivalent rent, nobody pays this price. It's a quarter of the index, and it's pushing inflation up in a way that actually nobody is experiencing. If we look at the various regional patterns of inflation, almost every single part of the U.S. economy has got deflation. Almost every single part of the economy in the United States, somewhere in the continental United States, in that sector, prices are falling. This is just not a sticky inflation environment, a persistent inflation environment. We know the fantasy of owner's equivalent rent is going to come down. We know headline inflation is going to come down. We know central bank policy doesn't influence inflation today, but in 12 or 18 months' time. I cannot understand why the Fed isn't moving already, to be perfectly honest.
So it's interesting here. I mean, what do you think is, if you're sitting back and looking at this U.S. Federal Reserve, what do you think are the key data points that they're looking at? What are they looking at that gives them that reason for caution?
Well, so I think that if you look at the Fed economists, the staff economists of the Federal Reserve, I think that they are looking at, for example, the PCE deflation, saying, no, we should be moving towards rate cuts. Inflation has come down a long way. The labor market is weakening if you look at the broad body of evidence. So therefore, we should be looking to cut rates. We don't want a tightening, an increasingly restrictive policy if the labor market is starting to show signs of weakness. That's not what you want, but that's what you've got at the moment. But I think the politics, the political spin around the Fed is difficult because politicians on Capitol Hill, these are simple people. They have one idea, which is CPI equals inflation. Now, no economist believes this, but that's what politicians go for. And with that in their mind, this one number means that the political temperature around CPI is very high. CPI is distorted, and perhaps the Fed feels that they would just bring political wrath down upon themselves were they to be easing rates with a CPI number, which is still relatively elevated.
I got to get this in. We're out of time, but this is too important. Lagarde and the ECB have executed a rate cut with, I would say, a minimal dialogue to measured. We seem to be, Paul Donovan, absolute slaves to Greenspanian measured trajectories. How do we break that? How do we become more like Lagarde, where we say, okay, we're going to cut rates and then see? How do we get there?
Well, so I think it's very interesting that the Fed, I'd say it's worse than Greenspan because there's no dissent these days. When was the last time we had at least a publicly dissenting voice from the FOMC? These decisions are all unanimous. It's really, really weird. Now, the UK, the Bank of England, is basically a fist fight every meeting. So, the UK is perhaps a somewhat weird perspective to come from. But even at the ECB, there is dissent. So it's this unanimity of thought, this almost Orwellian mind control that's going on at the Fed. That's what worries me.
Paul, we got to leave it there. Thank you. That was absolutely brilliant. Yep. Paul Donovan with UBS, 32 years. He's been an intern.
Yes,
an intern
exactly.
at UBS. Someday he's going to get a badge.
Yeah.
Speaking of badge, he's a fully employed member of Bloomberg News with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Amy. President Biden's son, now a convicted felon, Hunter Biden, has been found guilty on 3 federal counts for buying a firearm at a time when he was using crack cocaine. Bloomberg Law host June Grasso explains the next steps.
There'll be a probation report, sentencing. I mean, it's anyone's guess with the sentencing because I don't think, he could get, I believe it's 25 years. I don't think the judge would give him that. I mean, this is a crime where no one was injured at all. There's no victim in this crime. He's the only victim, really, of his drug addiction.
Bloomberg's June Grasso notes Hunter Biden chose not to take the stand in his own defense. As for the political impact, Bloomberg Politics contributor Jeannie Sheehan Zano has a word that it's still not clear.
We have seen some polling on this. For instance, Emerson did a poll and they found, similar to the reaction to Trump's conviction, that about 6 or 7 out of 10 American voters said it wouldn't impact their vote whatsoever. But that left about a quarter of Americans saying it might impact them. And in this case, about 11% of those were Democrats.
And Bloomberg Politics contributor Jeannie Sheehan Zano says Hunter Biden is facing another trial on tax charges, even closer to the November election. Group of 7 leaders will call on Hamas to accept the ceasefire deal outlined by U.S. President Joe Biden, according to a draft statement seen by Bloomberg. In the communique that they've issued at the end of their annual meeting taking place this week, the allies will also urge Israel to de-escalate from a full-scale military offensive in Rafah. Even Republican firebrand Marjorie Taylor Greene and progressive Democrat Alexandria Ocasio-Cortez agree on this. The House of Representatives, they need a pay raise. U.S. lawmakers haven't had a pay bump in 15 years. Lawmakers who will vote on moving forward with a pay raise later this week say a salary bump after several years of high inflation is crucial to retaining and attracting economically diverse candidates. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, and Amy.
Yeah, Michael Barr, thanks so much. Paul, we gotta sell the guest list here. I mean, Eric did a
They were working hard here.
He's got 3 interns.
I know.
So it gets easier in the summer.
Yep.
First of all, in the 9 o'clock hour, after the inflation report, James Bullard joins us. He's with Coronado at Purdue. He used to be with Indiana University.
That's everything's in Indiana. You got Indiana,
That's
Purdue,
like you going
Notre
to
Dame,
Duke and then working at Chapel
you
Hill.
can't do that. You can't do that.
And then Julia Coronado and Constance Hunter together
In studio.
both with MacroPolicy. Oh, they're in studio.
Yes.
MacroPolicy
Boom.
Perspectives. Very cool. Tom Purcelli before that on wage growth. Cole Smead.
Yep.
I wonder if he owns
Small
Apple.
caps. Yep.
On the equity market and on value.
Okay. Value
They were
stocks.
doing great with energy at one, but Gargi Chaudhuri's on deck here. It's like Yankee baseball. You got Soto in a
Murderers
box,
Row,
and you're
yeah.
looking at on deck,
Yep.
and it's Judge. We got Paul
10 to
Donovan.
1 last night. They just mashed it again last night.
They're better than 27.
Yep.
I mean, it was the dreaded Yankees. I mean, I hate them, but
They are
they're
good this
really,
year.
really impressive. Gargi Chaudhuri's on deck, which is pretty cool.
Orioles still there.
She got a weighted bat on deck before
Exactly.
she comes in to tell us about fixed income. This is an important day. Stay with us. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Artificial intelligence fueling Apple to a record close on Wall Street. Shares soared more than 7% yesterday, adding $215 billion to that company's market capitalization, making for one of the biggest single-day value adds by any company in history. We check markets for you all day long here at Bloomberg. S&P futures are up 0.1%. NASDAQ futures up 0.1%. The Dow up 0.1%. The 10-year Treasury yield at 4.39%, and the 2-year yield at 4.83%. Let's check gold now, up 0.1% or $3.50. Trading now at $23.30 per ounce, and NYMEX crude oil up 1% or 89 cents, trading at $78.79 a barrel. Global oil markets are facing a major surplus this decade as the shift away from fossil fuels is causing demand to hit a plateau amid plentiful supply growth. That's according to the International Energy Agency. And that's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Greatly appreciated. Gold. Was that wonderful yesterday with James Steele?
Yes, that was
of
great.
HSBC.
Yep.
I learned a lot.
I did too.
I had no idea about the modern Fort Knox. I was making jokes about
Fort Knox. I know. And HSBC has a huge vault here in New York City. Who knew that?
Yeah. Just JP under the new skyscraper in Park Avenue.
Wow. What are they going to do there?
Do you think Gargi Chaudhuri has a vault at BlackRock?
They could possibly.
Probably there's gold in the Chaudhuri vault.
Yep.
At BlackRock. Joining us now, and it's really eventful day. Gargi Chaudhuri joins us with BlackRock here, of course, Chief Investment Portfolio Strategist, Americas as well. What will you listen for or study at 8:30 and in the press conference this afternoon, Gargi?
Good morning. It's great to be here. And I was just listening to your Gold Vault podcast from yesterday on my run this morning, and it was fantastic. I'll start by that. And so what will I listen for? A couple of things. Number one, I'll look at the statement to see if they've kept that sentence around, them needing the lack of further progress towards inflation. So I'll look to see if that has been deleted or not. I expect that to be there. And then obviously in the statement of economic projections, I'll be looking to see if they are at 2 or 1 rate cut for 2024. My expectations are that it's going to remain at 2, but obviously I think that might get shifted if we get a hotter than expected CPI at 8:30 a.m. today. And then during the press conference, I'll really be listening to see if Chair Powell, number one, talks about that three-path policy, the three policy paths that he had laid out in the last FOMC press conference. If there's any focus on those 3 paths, I'll listen to see them talk about whether they have more of an easing bias and how much mention there is of the unemployment path versus the inflation path. So that's what I'm looking for. But I think all eyes really today are going to be on that SEP forecast to see whether it's 2 or 1 and how 2025 growth and inflation projections as well as SEP looks.
Gargi, I think a lot, I guess the market's really modified its thinking here about what the Fed's going to do this year. We entered the year thinking perhaps 6 rate cuts. Now, if you look at WRPGO, it's maybe 1 to 2 here. How do you think about 2025? When the Fed does eventually begin to cut rates, how do you think they're going to do it? Should we expect a series of rate cuts? If so, are they 25, 50 basis points? How do you think the Fed will go here once they do start?
Yeah. Absolutely. So I think so much of that depends. Unfortunately, it's like sort of a it depends answer. Yep. It does depend on the path of policy, right? So the path of inflation, I mean. So far, inflation isn't where the Fed would have liked. It's not where we would have liked to see, but it is still coming down. Today at 8:30, I hope that we'll see another sort of weak 0.3. We'll see core inflation at about sort of 3.4, 3.5%. And I think that's not exactly where they would like it to be, but it's making progress. Having said that, when we go into 2025, whether it's related to tariffs, whether it's related to, sort of changes to immigration, whether it's related to the housing market, whether it's related to various other things, if inflation reverses some of the normalization that we have seen so far in 2023 and 2024, I think the Fed could be in a little bit of trouble. But having said that, the expectations today are that inflation will still continue to decelerate. That very important shelter, the OER component that you were just talking about with your previous guest, will come down. And that means that the Fed will be able to normalize back down to sort of the high threes, maybe the fours.
I mean, everybody's lathered up on this. Paul Donovan at UBS, David Rosenberg's borderline hysterical up in Toronto on this. Gargi, if you take out like selected things we know, like Budweiser in cans in New Jersey is hugely inflated, or auto insurance, we've all identified as hugely inflated. Can you go in and take out these selective things that are stupid inflation and then say it is disinflation?
Well, the Fed has done that. They've obviously given us this super core measure, and they've told us that we know that shelter inflation in the real economy versus measured shelter inflation looks different. Now, the thing is, what are people experiencing? What are you and I experiencing? I think that matters too. I think we can all say comfortably that we have not seen prices come back to pre-pandemic levels, but we have seen an arrest in the acceleration of prices. Now, when you go to get your smoothie or your salad, it's not still going up in price. It's still $17, but it's not going up anymore. So I think that there should be a little bit of confidence in the fact that prices have stopped going up. And I think the Fed can take a lot of comfort in that.
They booked Gargi because Lisa went to Atlanta. And so they know that you and I haven't had a smoothie or a salad in 15 years. We're talking to Iron Man woman. I know. And she's having smoothie and salads for dinner like Lisa. When was the last
Nathan's
time?
Hot dogs, whatever you want.
Exactly. When was the last time, Paul, you had a smoothie?
Vegan Nathan hot dog. I'll have that.
Chocolate milkshake. I'm in good shape. Gargi, what do we do here with these markets here, given that this Fed likely will be cutting rates, but maybe longer, maybe later than the market had thought about here. As you think about it as a strategist, how do you think about kind of investment strategy here? Equities, fixed income. Where do you start?
I think there's some tremendous opportunities in the market. I think that's what we're most excited about. So first of all, just thinking about the fixed income market, look, I think yields in the very long end can continue to move higher, but that front end, so sort of looking at the 2, 3, 4, 5-year part of investment grade credit or treasuries, even inflation-linked bond, mortgages, CLOs, I think all of that gives you some really attractive income. I think that is what investors are focusing on. We're finding that in our flows. And that's also what we think investors should continue to focus on. So really staying in very high quality parts of the fixed income market without taking a lot of duration risk. When you go out to the equity markets, I think, we've seen over and over again, cash flow wins the day, earnings growth wins the day. Stay in the high quality parts of the market. There is no need right now for you to go to the smaller cap parts of the market. There's really no need for investors to do that, given that the earnings growth is still in the high quality parts. So we've been saying that from the beginning of the year, in fact, from sort of the middle of last year, high quality names and equity, stay in those communication services, stay in tech plus, maybe some high quality parts of healthcare, even financials. And then in fixed income, clip your coupon, this attractive income that you're getting in the very front end.
Gargi, thank you so much for the brief. Gargi Chaudhuri, Chief Investment Portfolio Strategist Americas for BlackRock, is well. What I know in talking to people on the street is add-on costs that are fixed are killing them.
Yeah.
Auto insurance.
Yeah.
House insurance, renter's insurance. Lots of other things.
Yeah, some of those fixed costs,
they're fixed costs.
Yeah.
That's the thing.
Yeah, they're there. And as Gargi was saying, the absolute levels are just so much higher than they were pre-pandemic. And there's obviously a million reasons why, the prices increased from the supply side. But at the very least, the rate of inflation off of those levels is much lower. And that is a good thing. But boy, it doesn't feel that way for a lot of people and a lot of goods and services they buy. We're
going to go beneath the headline data at 8:30. Stay with us. A wonderful set of guests, including Jim Bullard will be with us, the former president of the St. Louis Fed. We're on Apple CarPlay and Android as well. Download the Bloomberg Business app free. There's no cost to that. On YouTube, subscribe to Bloomberg Podcasts. It is an important day, a Fed day, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Futures little changed. Everybody buckled up for CPI data. It's about an hour from now. Then we'll hear from the Fed later this afternoon. Those two things happening on the same day has only happened 7 times in the past 10 years. And we check the markets for you all day long at Bloomberg. S&P up 0.1%. NASDAQ futures up 0.2%, and Dow futures up 0.1%. The 10-year Treasury yield at 4.39%, and the 2-year yield at 4.83%. Want to keep an eye on Oracle today. They reported better than expected bookings and announced a partnership deal with tech rival, giving a boost to Chairman Larry Ellison's effort to redefine the software maker as a major competitor in the business of cloud computing. Oracle shares jumping 8.7% in the pre-market. That's your Bloomberg Business Flash. Tom and Paul.
Okay, thanks so much, Amy. This is important. It can be a 3-hour conversation. We're going to cram in here in about 8 minutes. We'll talk about Phoenix and the heat. It's 112 degrees there this weekend. It's 111 high right now. But joining us is one of the premier value investors literally in the world, Cole Smead with his father. They're borderline iconic. And to be direct, you buy an index fund, and then you buy something non-correlated to, say, the S&P 500. And the R squared, it's called, of the Smead portfolio is exquisite. And then Paul, the 3-year track record out of 100 funds, 97 did worse than them.
Really?
5-year track record out of 100 funds, 95 did worse than them.
Okay.
There's no one we're talking to this quarter like Cole Smead. Why don't you bring him in?
Cole Smead, CEO, portfolio manager, Smead Capital Management. Cole, we're going to get some inflation data today. We're going to get some commentary from this Federal Reserve. What are you going to be looking for today? It's a big economic, big macro picture day today. What are you looking for?
Yeah, I feel bad for the Fed. Jay Powell's done as good a job as managing this as anybody could. But we're really just dealing with the symptoms of the problem, and we're kind of studying the symptoms. We've never spent 7% of our GDP with less than 7% unemployment in the history of the United States of America. We're sub 4 on unemployment instead. You cannot deal with CPI, inflation, pricing pressures without dealing with federal spending. Like I think I said to Matt Miller yesterday, you go back to your economics classes, guns and butter was the old economics lesson.
Yep.
It ended up being butter because Vietnam tapered during the 70s. I would say Amity Schle's book, The Great Society, is a wonderful example of that history. But I only pointed it out because the idea that we're going to stem inflation while we are absolutely throwing way too much money on the U.S. economy and it's seeing it espoused in places like the labor markets, I think that's an impossible task.
So are you one that thinks that this Fed should just hold rates where they are, or do you think that a lot of folks already think the Fed's behind the curve and should be cutting rates already?
Yeah, I'll throw out another part-time resident in Phoenix, Larry Summers. He said something really interesting at an event in March. He argued that we have not seen a fall off in the economy, the labor market in many places with these tight rates. Yep. He argued that because we're not as tied to the credit cycle, if you look at like software as a percentage of fixed business investment, that we're less credit cycle related. So therefore, the R star or the natural rate of interest is plausibly higher because of how less the economy is tied to that. And so if you can't break it at 5 and change, you're plausibly at higher rates, quote unquote tight. I mean, look at the loosening. I mean, there's been a loosening happening. Look at what the stock market's been doing. Look at the money being raised in private credit. It doesn't seem tight. And so the idea that we're tight, I don't agree with that. I don't think it feels or looks or is tight.
I got 8 ways to go in your portfolio and how you deliver excellence. Let's start with one of your major holdings is Simon Property Group.
Yeah.
Is that you're buying CRE or are you avoiding commercial real estate?
Yeah, so, I mean, we all know what's going on with commercial real estate. I would just say commercial real estate, 30% of the demand is gone, okay? What can cause that demand to come back? Not in the current location. I don't think so. Think of downtown urban office. That's the tough part. If you have suburban office, congratulations, you're doing fine. Working mothers with more than 2 kids, they are deciding commercial real estate. I call that lady Lola. I don't know if she's married. I don't know if she has more than 2 kids, but I know that she at least has 2. If it's within 30 minutes of her home or her kid's school, she'll show up in office. Compared to the past, if they said, hey, Lola, you have to come back, and she says no, they would just fire her. But they can't because look at the labor market. We cannot fill that role with a new person. Take that problem, compare it to malls. Malls haven't been created for a very long time. B and C retail is getting destroyed, but Class A malls, you're seeing online retailers show up. So to your point, Tom, we just moved in 10 weeks ago to a 2nd-story office space, brand new for us, above a Ralph Lauren store. We have 10 restaurants on property. It's a wonderful facility to get all the convenience of life done while you go work. That's where we're going in office. Look at the Diamond Tower being built here on Park Avenue. That will be highly amenitized.
I love that. Is that what they're going to call it?
Well, that's they joke
the
about
Diamond
it.
Tower?
Yeah, but
I love that.
That's JP Morgan Chase,
it'll be
folks.
fully amenitized, and therefore it fills. Fresh always sells. Downtown urban is old. So think of the Art Deco classic buildings we have here in Manhattan. The problem is if you can't do 2 or 3 things in that building, it'll be tough to get Lola in office.
Energy. I see, we're seeing WTI crude oil, just under $80 a barrel here. What's your energy call here?
You guys just mentioned IEA's comments right before I came on. I love IEA because they make economists look respectable on their predictions, okay? It's the same group that said 13 years ago we were at peak coal. We just used more coal in any year than we had in human history, okay? So I think about it like this. First off, I think the Saudis and OPEC Plus are being wise. They know that we as Americans cannot continue to produce at this level. Go look at any company that announced higher CapEx. Their stock gets slaughtered, okay? Shareholders are not willing to allow that. So I point that out because we're in a tighter environment, longer term. Vicky Holland of Oxy keeps saying 2025, there's a line in the sand. She bet on Crown Rock that she'll be producing more barrels after 2025 and others won't. We think that is wise. That being said, you cannot be a technology bull without being an energy bull.
Right.
Because Jevons paradox, Stanley Jevons of 19th century fame.
Listen to you in sunspots.
The efficiencies in technology do nothing but cause higher energy demand, not less. And the fallacy has been...
My word. Cole Smead, 19th century marginalia. It's too much. I can't stand it.
I got to keep up with your
Cole,
London school guests.
Cole, I got to cut to the chase. With the cash flow development of the Magnificent Seven, just equate, and this is an amateur look, but let's do it. What PE multiple do you need on Apple where you say that's a Smead value holding?
It's a good question. The most recent one I actually looked at, and I'll use a better example.
Sure.
The adjustment from an accounting perspective that we make when you go from, say, free cash flow, to your point, we have another definition that Buffett's had in the past called owner earnings, where you have to adjust for things that are important to you as the economic owner. So let's use Amazon. Amazon's going to produce about $32 billion in free cash flow this year. People say, gosh, that's amazing. And the Wall Street analysts say, look where that free cash flow's come from. Now, here's the catch, and it's a big catch.
Trading at 51 times earnings.
Okay, but it's worse than that, okay? If you take out the stock-based compensation, and by this is like CFA level 2, Tom, right? Okay. If you adjust the stock-based compensation out of that, you'll find they did $24 billion in stock-based comp. If you take that out, they did $8 billion in actual owner free cash flow. Because that is, stock-based comp is not free.
Is Apple as devious as that?
I would say the techs in general, this is an American form of arrogance, in my opinion. You will not find this practice abroad.
And that's why there's no technology abroad.
Well,
that's why the incentives in Silicon Valley have made U.S. the technological giant of the world. There's nothing in Europe.
I don't disagree, but treating that like that's a purely American thing, I think that is chronological snobbery. We said the same thing to the Japanese in the late 80s.
One final question. When do small caps finally get a bid? It's away from your remit, but they're in the tank.
Yeah, the secret to life is weak competition, as Buffett said in the 98 meeting. Big tech, large cap doing poorly makes small cap look like genius.
Are you worried about the excessive heat in your Phoenix?
Yeah.
Is it finally at a tipping point?
I'm not. I'll give a plug to Joe and Tracy on Odd Lots.
Who?
Joe and Tracy, because what they did with Chase Emerson on water in Arizona off the New York Times article was superb. I highly recommend that all the time. I live in the greatest state in the union. You guys should come visit and do it sometime.
Paul? This guy cocomes in. He mentions Matt Miller, Joe Weisenthal, Tracy Alloway. Should we have him again? What do you think? I mean, it's 50-50. Miller's here. He's in the control room.
I know.
Can we get the control room cam on Matt Miller? Look at him. He's so casual.
I think we do a remote in Phoenix, but we do it in
the Royal Palms.
Yeah. Let's go to the Royal Palms. We'll
in the courtyard there.
At the Royal Palms, Tom. I'll take care of it. I'll take care of it.
The Diamondbacks at Phoenix?
We're 3 games under 500. We're going to make it back. We were barely over 500 to make the playoffs last year. I'm going to give you that
It's
call.
true.
We'll make the playoffs wild card style.
Don't be a stranger. Cole Smead, thank you so much. Next time, mention us on their shows as well. Cole Smead, sterling, just outstanding value record over 3 years and 5 years. Futures up 7. With our news on this important Fed Day, Michael Barr.
Thank you very much, Tom. Paul, Amy. Hunter Biden's attorneys said that they will continue to vigorously pursue all the legal challenges available. President Joe Biden's son faces sentencing after jurors in Delaware found him guilty on firearms charges. After the verdict, jurors are speaking out about the conclusion they reached.
The verdict, I believe, was not politically motivated.
Biden released a statement after the verdict and said he is more grateful for the love and support from his wife, friends, and family than he is disappointed by the outcome. A new poll done by the Pew Research Center says people around the world are more confident in Joe Biden than Donald Trump. Bloomberg's Ed Baxter has the story.
Pew says this is a poll done in 34 countries. It found a median of 43% saying they trust Biden to do the right thing in world affairs compared to 28% from Trump. People had more positive assessment of Biden than Trump in 24 countries, while Trump led in Hungary and Tunisia, and the two were effectively tied in 8 others. But this comes as well at a time when global faith in U.S. democracy is waning. A median 4 in 10 told pollsters that democracy used to be a good example for other countries to follow, but that it no longer is. Ed Baxter, Bloomberg Radio.
In yesterday's primaries in South Carolina, Representative Nancy Mace, who went from a critic to an ally of Donald Trump, won her primary with 56.8% of the vote. Mace was one of the 7 GOP members to oust former House Speaker Kevin McCarthy. French President Emmanuel Macron said he won't resign if his party suffers a poor result in the snap parliamentary election he called on Sunday. Macron called for them after Marine Le Pen's national rally handed him a crushing defeat Sunday in elections for the European Parliament. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Amy.
And Michael Barr, thanks so much. Greatly appreciated. Paul, we're going to talk there about Cole Smead.
Yeah.
And this idea of having to encourage, there's the S&P 500, and then people will have an actively managed fund that is 92% like the S&P 500,
right.
like
Yep.
very, very close overlap, where the Smead fund is only 50% like it. Like they have American Express,
Yep.
just as one example, and Simon Property Group I mentioned. But they're really an odd portfolio away from the index mania of the day.
I mean, again, they look at value. I was looking through the portfolio, some financials, some energy.
They don't have NVIDIA.
No, I'm not sure they're a big
that's
NVIDIA
not
player
there.
there. So again, a la Warren Buffett, I would say underweighted technology, and to put up performance when you're underweighted technology, that says something.
But how much, and help me on live chat, if you buy a share of Berkshire Hathaway, how much Apple do you own? It's like a lot, right?
A lot. Exactly. They're big owners there. So, but again, it's interesting to see how Berkshire's going to evolve over the coming years as some of these newer managers get more and more say over the portfolio.
We'll do some equity here moving forward, but really a lot of economics coming up in the next couple hours. We do this out on Apple CarPlay, on Android, on YouTube. We're on the live chat right now. I barely had time to get on. I'll be good here in the next 15 minutes and get on YouTube live chats. Subscribe to Bloomberg Podcasts. Search for Bloomberg Podcasts on YouTube. It'll get you there. We got a full replay of the show, 2 hours, 56 minutes. Wow. Let me make clear, everybody's on there. Paul and Alex Steele, you can see out on YouTube as well, all through the day.
Absolutely.
Carol and Tim. It's Fed Day. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Stocks are set to extend their record-setting rally as traders are in position for the potential disruption from inflation data landing just hours ahead of the Federal Reserve's interest rate decision. All of that happening today. We check markets for you all day on Bloomberg. The S&P futures up 0.1%, NASDAQ futures up 0.1%, Dow futures up 0.1%. The 10-year Treasury yield at 4.39%, two-year yield at 4.83%. NYMEX crude oil now 1.2% higher, or 92 cents, trading at $78.82 a barrel, and Brent crude 1% higher, or 86 cents, trading at $82.78 a barrel. The International Energy Agency says global oil markets are facing a surplus this decade as they shift away from fossil fuels and causes demand to hit a plateau amid a plentiful supply growth. Again, that's this decade. And that's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Bloomberg Surveillance this morning. We're brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, and low transparent commissions. Learn more at ibkr.com/bonds. And we thank Interactive Brokers for their efforts with us. Really, really appreciate it. Right now, we've really been anticipating this. If you get off a plane at Heathrow and you take the road in the green, they have these taxi cabs, Paul, that drive like a Bentley. They're like electric taxi cabs that are spectacular. And if you drive into Jonathan Maxwell's London, it's immediately evident that it's different than here. And then you take that over to the recent elections in Europe, and you've got a green Europe, a green United Kingdom compared to the United States. And this is front and center now with all the politics of France, Macron, frankly, of Germany as well. Jonathan Maxwell, CEO at Sustainable Development Capital, a heritage with HSBC Infrastructure. Jonathan, thrilled to have you on the show. The protest against green in the recent elections, is that about green, or is that about the cost of green to citizens?
It's mostly about economics. I mean, there have been some, there's a statement by the Italian Prime Minister pushing back, for example, on one of Italy's greatest industries, the motor industry, and the European proposals to phase out petrol diesel cars by 2035, saying that was an ideological mistake or an ideologically led mistake, right? But yes, I think that the economics is one of the very big factors that's going on here. Look, 2-3 years ago in Europe, you'd be accused of greenwash. That is, you're trying to put yourself out as green as a government or a company, and you're not as green as you could or should be. Then it got into kind of green hush. People got sued overstating.
Yeah, interesting.
Now we're in this kind of what the European Council on Foreign Relations calls green lash. Green lash. You are backlash against the economics.
Jonathan,
it doesn't need to be that way.
You're encyclopedic on this. And I'm fascinated if green in Europe comes towards what I'm going to call the anti-climate change of America, or does America come towards the green of Europe? Which is it?
Look, there are three big things going on here. The biggest one is about economics. And I'll come back to that because I think it's just completely misunderstood how the economics of the energy system can and should work and does work today. But there are a couple of other bits that are going on in Europe. We've got a huge problem with energy security and resilience in Europe. There's a very big difference from America and Europe, which is that you make energy. In fact, you're a net exporter. You're the world's largest oil and gas producer and exporter going forward. Europe doesn't. It imports energy, right? It depends by and large on other countries. In fact, now, after the Russia-Ukraine crisis cut off gas to most of Europe, actually, Europe's now dependent on the United States as much as other regions like Qatar and so on. So there's a big difference. You export, we import, we being Europe, right? But resilience and energy security is now a massive feature. The second massive feature, obviously, is environment and carbon. And yes, there have been some really quite progressive policies in Europe. But you've got the Inflation Reduction Act. It's dollar for dollar. It's about the same amount. If you look at the amount of money that's being put in to, so to speak, the green or climate economy in America versus Europe, it's about the same. It's about the same. We had about a $750 billion post-COVID stimulus package. Biggest part of it, which is now the controversial bit, is the Green Deal. It's about the same as the Inflation Reduction Act. But here's the big one, and this is why I think it's so misunderstood. If people are pushing back in Europe on the energy or clean energy sector for cost, it just misunderstands the biggest problem with the energy sector. Most of it's wasted. In America, about 70% of all the primary energy, that is all the original natural resource, is lost before it gets to the point of use through conversion, generation, and distribution and transmission. It's about the same in Europe. So what actually the European real policy is on energy is actually very, very interesting and possibly more progressive than America at this stage. And it basically says energy efficiency first. What happens if you use less energy to do the same job or more? You become productive, more competitive. So actually, now there are some strange, maybe over-egged policies where, things like maybe people got a bit too excited about technologies like hydrogen from time to time. Batteries don't necessarily help and cost more, but there's an awful lot we can do that costs less.
Right. And Jonathan, General Atlantic Fund, these are financial players. They just bought a stake in your company. That tells me that, some smart money is still pursuing these types of policies. Talk to us about that transaction.
So, our firm, our company, Sustainable Development Capital, fundamentally looks at the world and says, what's the most resource-efficient way of doing business? Why do we care about being resource-efficient? Because you can use less and do the same or more. That's more competitive, more productive, more profitable.
But in the time, I want to interrupt here because I think, Jonathan, this is really, really important. In the time that we've got left, is it simple to say that with these set of elections, there's been a massive protest against green? Is that correct or not?
I think that there's been a protest. There were 73 seats out of 705 that were green. It's now 53 seats. The bigger story is the fact that the real opportunity for Europe and the real problem is how do you manage cost and reliability and carbon and energy? The real solution to that is be more productive, more efficient, more competitive. And it's efficiency first. That's the European policy. That's the business plan. And that's what General Atlantic have backed in us, because that's everything that we do. When we make investments in the market, we're looking for projects, companies, opportunities that are more energy efficient because you can deliver the same or better outcome economically using less energy. That's the biggest bang from the buck from a carbon emission reduction perspective.
Jonathan,
and that's what General Atlantic are backing.
I have to go. Jonathan, thank you so much. Jonathan Maxwell with us with Sustainable Development Capital. Paul, I think it's a huge deal. I don't know what to make of it.
Yep.
But the fact is, everything I read, I think Le Monde's been lighting it up in Paris. Yeah, on the French election as well. But on these sets of elections, including a more conservative Eastern Europe, there's something percolating here, and I don't know what to make of it. Because when I was thunderstruck the last time I was in London over how green everything seemed to be around me.
Yeah,
and I did not expect that.
Yeah, the conversation has certainly shifted here in the U.S. as it relates to the discussion of green, ESG, whatever you want to kind of frame it, and it's become much more of an uphill battle, I think, for a lot of folks that are pushing on those policies. In Europe, it was still seen as very ESG positive. Funds are still flowing into
like
those
the Great Atlantic
funds
that you mentioned.
Yeah, but again, those elections that we'd had, Tom, you're right. They just kind of say, okay, this is not just an American issue. This is becoming a little bit of a global issue here. How do you frame some of these green policies and ESG discussions?
Our Anne-Marie Horton at the G7 meetings there early in Puglia. We'll be going to her late in the 9 o'clock hour. She's had an incredibly busy day in the travels here. This is south of Rome, a little bit remote. It's Puglia or Apulia.
Okay.
There's two names.
Okay.
Mr. Farrow says Puglia.
Yeah, that's what I understood.
I guess Englishized, it's Apulia.
Okay, all right.
But
I'll go with John Farrow.
I've been lectured that I'm supposed to say Puglia.
Okay. Yeah, I'll go.
A great song, Rick Springfield, to get us to the next hour. inflation in 34 minutes. Good morning.
Jesse's got himself a girl and I wanna make her mine. And she's watching him with those eyes. And she's loving with that body, I just know it. And he's holding her in his arms late at night. You know, I wish that I had Jesse's girl. I wish that I had Jesse's girl. Where can I find a woman like that?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Good morning, everyone. Paul Sweeney, Michael Barr, Amy Morrison for Lisa. When's Lisa come back? Is it like a month sabbatical?
We might get her tomorrow. She's out there doing Bloomberg proud.
Out with Bloomberg LP in support of all that we do with the terminal. Lisa Mateo, please travel carefully. We're going to travel carefully for the next 29 minutes to a hugely anticipated CPI report. Why? Because after that, we go 4, 5, 6 hours on to a Fed day where they readjust the dots. Paul, where you sit, what's the linkage of CPI to the dots 6 hours later?
You know, it's certainly there. I mean, we've got inflation coming down. That's a good news. But it's stickier this last 100 basis points or so that the market needs to see, that the Federal Reserve says that it needs to see. And it is a data-dependent Federal Reserve. So, again, today's print will be important.
In your commute, good morning on Apple CarPlay, on Android. In your commute and as well at home, good morning on YouTube. Just can't say enough about what we're doing at Bloomberg Podcast. Let me go backwards. You're going to hear from Julia Coronado, Constance Hunter together, the former president of the St. Louis Fed. He is the one that redefined the word regime in the modern sense. What is the Powell regime that we are in right now? James Bullard will join us. Mark Zandy was on fire the last time he was on the show. Moody's Analytics. Jane Foley on an ascendant dollar. Ludovic Subran will join us in moments. Bloomberg Surveillance this morning brought to you by Cohn Resnick. Advisory Assurance Tax. See how business strategies from the world of golf can help your company build competitive advantage. Watch the Business of Golf series at cohnresnick.com/golf. Now on your American wage, coast to coast, Tom Purcelli of PGIM. Do we have real wage growth, Tom Purcelli?
Well, you know, first, good to be with you guys, as always. Look, I think that here's what's really critical to me, Tom. Let's just say the answer is yes. Here's the bigger problem, and I think this ties really nicely into today's CPI report. When we look at inflation, I think you can break inflation down in an assortment of different ways. And one of those ways is to basically look at sort of core discretionary inflation and core staples in inflation. Now, if everyone was running out and spending, aggressively, you would expect that the discretionary part of inflation would really be the one sector that was doing, keeping inflation, quote unquote, sticky, right? A phrase I absolutely hate. But it's not. Core discretionary inflation is actually outright deflating. It's the staples part that is doing all of the damage. And I think that, to me, is a really important idea as it relates to, if there are real wage gains, it's being sucked up by all of the staples. And I think that's the real challenge, I think, for the broader economic backdrop in the months to come.
Tom Purcelli of PGIM with us. Amy Morris will give you a complete data check here in about 15 minutes. A lift to the market. NASDAQ up 0.2%. The Sweeney index 4.83% on the 2-year yield. I'm going to call that quiescent. And Paul, I do want to note Brent crude rounded up $83 a barrel.
Yeah, absolutely. Hey, Tom, if that core inflation, it remains sticky, is there much the Fed can do about that right now in terms of it's tough?
Yeah, Paul, I think that this is really, I think, the part of the problem. There's very little the Fed can do about it. I mean, I think about that in the context of supercore. I mean, let's be honest. There is nothing particularly super about supercore. In fact, I think it does a massive disservice to the entire inflation conversation. First of all, supercore is only about 50% of inflation. So what you're doing is you're literally stripping out 50% of the things that are deflating. I don't know how that's helpful. I mean, you think about your basket of goods that you spend money on. You spend money on these things that are deflating too. So I have no sympathy for supercore. But what I do have some sympathy for is the idea of stripping out shelter prices, because I think we all appreciate that shelter prices is just a hot mess. It's not calculated well. So I'll give you a really simple way, Paul, of thinking about inflation without having to go into any super core acrobatics. Just look at headline CPI ex shelter, and look at core CPI ex shelter. And you know what both of those are doing on a year-over-year basis? They're both right around 2%, right? They're like 2.1%. So without any of the gymnastics, I think you could easily make the argument that inflation is basically already back down to target.
So what should our Federal Reserve do here? I mean, arguably, a lot of folks are saying they should be cutting already.
Yeah, and look, and that is an idea I have a ton of sympathy for. I mean, I think, when you think about the labor backdrop, I do think that there are cracks forming in the labor backdrop. It doesn't mean that the floor is going to fall out from beneath labor. But I think this is one of the reasons why Powell has kept the cutting discussion alive. I think he's acutely aware of some of these cracks that are forming. Again, not that it has to be aggressive and it doesn't have to turn into this ugly dynamic.
Yeah.
But I think in the context of that, I think that there's a really sound argument for the Fed to start the process of cutting.
Tom, on a pseudo-theoretic basis, and I brought this up, and I'm not going to quit saying it, folks. I'll probably say it on the show this afternoon. Is this Fed a slave to the idea that once they cut, they have to be on a measured quarter-point track? I don't think they're like the ECB. I think they're Greenspanian, where they're scared stiff to cut once, because if they do, they signal they got to cut a zillion times.
Yeah, again, another idea, Tom, that I have a lot of sympathy for. I think it's all in the narrative. I mean, the Fed has done this in the past, where they actually have cut a couple of times and then sort of let that run. And of course, I'm referencing, sort of the 1994, 1995. So it's all in how it's presented. If classically, when the Fed cuts rates outside of that one window that we just mentioned, classically, when the Fed cuts rates, they aggressively cut rates. It doesn't have to be that way depending how the backdrop is evolving. If the backdrop is deteriorating, then it's going to be expected that the Fed will cut. But if the backdrop is actually okay, which is what I would define today as, and they're just basically, going through the process of adjusting what had been a very aggressive tightening cycle, I think the Fed can get away with
Paul,
that. But again, it's all a narrative.
This is a huge deal in that we've got a guy talking about a narrative, and yet you and I are counting dots.
Yeah.
Bullard's going to be hysterical about this in about an hour.
I know he is. Hey, Tom, we think about inflation. It obviously goes to the discussion of the U.S. consumer. What's your view of the consumer today?
Yeah, Paul, I think this goes back to an idea that I mentioned at the top. I think what we have to bear in mind is I think on balance, the consumer is largely fine. I think that, when I think about our base case scenario, our base case sees, sort of growth persisting at a more modest pace, but nevertheless persisting. But I think one of the things that we have to be mindful of is you have a disproportionate share of the consumer's income pie, their disposable income pie, that's now being chewed up, or that is growing more toward the staple side than the discretionary side. And this is a very different sort of shade of spending than what we had been witnessing over the last year or so. Right. So I think the consumer can hang in there. But Paul, I think a lot of it's going to come down to what happens from a margin compression perspective. The more margins compress, the more companies will go after sort of the three key pillars of labor. That's they will adjust hours to try to save margin. They'll go after wages to save margin. And if those two things don't work, then they go after headcount.
Okay.
And so that's something we'll be watching closely.
So let's go away from CPI to the next jobs report, early July. Are you suggesting finally we get an unemployment rate that moves?
I mean, it's and Tom, I love that. So you're hanging. That's like a hanging slider for me. I think that the reality is this: the unemployment rate is up, and it's not up. I wouldn't define it as a lot, but it's not up a little. I mean, you were as low as 3-4, and now you're 4%. That's quite a move. And the direction of travel matters. And look, I know everyone loves to say, hey, but jobless claims, they're really still low, and et cetera, et cetera. Yeah, but just remember something about jobless claims. Jobless claims only capture one side of the labor equation. They capture the firing side of the equation. And it tells you absolutely nothing about hiring. So yes, it's fantastic that there's not a lot of firing going on at the moment, and that's obviously a wonderful thing. But I would actually point to a number of factors that suggest that the hiring side is starting to slow down. Again, the last payroll report notwithstanding, that is one of the most lagging of lagging indicators. That's not the thing that's going to tell you what's happening beneath the surface. But beneath the surface, it does seem like things are starting to slow down from a labor perspective.
Tom Purcell, you got to run. Thank you so much. And I hate that he brings up hanging sliders, because this is when Stanton hit a hanging slider against the Red Sox. That ball hasn't come down yet.
Exactly.
It was at Fenway. The ball went over the cask and flagon. It was last seen over Everett, Massachusetts. That's so much for a hanging slider. Tom Purcelli, go away. Thank you. That was valuable. Futures update with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Amy. Hunter Biden's legal woes are not over after his conviction on 3 felony firearms charges in a trial that put a spotlight on his drug-fueled past. Now, President Joe Biden's son faces sentencing and another trial on tax charges in the middle of his father's re-election campaign. It took the jury just 3 hours to reach its verdict. We get more from Bloomberg Law host June Grasso.
I'm surprised it came in so fast, but there was a lot of evidence that the prosecution presented that Hunter Biden was addicted to drugs around the time, at least, that he filled out that form.
Bloomberg's June Grasso says Hunter Biden faces a maximum of 25 years in prison. Bloomberg politics contributor Jeannie Sheehan-Zaino says this could have an impact on the campaign trail.
I think we undercount how much of a toll this takes on a father or a mother, a parent in this case, and how that can impact a candidate running for office on top of trying to serve as president of the United States.
Jeannie Sheehan-Zaino notes the president has ruled out a pardon. He put out a statement saying he will continue to respect the judicial process as his son considers an appeal. Hamas says it has given Qatari and Egyptian mediators its reply to the U.S.-backed proposal for a ceasefire in Gaza, seeking some amendments on the deal. Hamas said they were ready to deal positively to arrive at an agreement and that their priority is to bring a complete stop to the war. The foreign ministries of Qatar and Egypt and the White House officials were examining the response. 8 individuals with suspected ties to the Islamic State group have been arrested in the United States in recent days. That's according to people familiar with the matter. The people say the arrest took place in New York, Philadelphia, and Los Angeles, and the individuals who entered the U.S. through the southern border are being held on immigration violations. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Amy.
You got to get this in before we go economic here with the CPI report in 13 minutes. How can you not get motivated for the Celtics tonight when they're coming out of the locker room all wearing the same black shirt with white letters Walton across it?
Yes.
They got a reason to go out and win.
And a shout out, Bill Walton. God, man, we miss you. Period. I mean, he was one of the greatest ever and great in the booth.
I remember the Rangers had a run where I don't have it in front of me. Martin St. Louis' father died. I can't remember. His mother, thank you, Rich. And that single-handedly drove the Rangers further.
Yep.
And this great photo, ESPN, thank you for that image as well. Celtics Mavericks tonight. I'm not betting on it. I don't, be informed. I'm going to bet on the Red Sox.
Good luck.
Who did they lose to again?
Inflation in 12 minutes. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Amy Morris, and futures a little changed on the upside. That's where they've been pretty much all morning long. Traders still waiting on today's double risk event with the release of inflation data about 15 minutes from now. Then we'll be hearing from the Fed this afternoon. S&P futures up 0.1%, NASDAQ futures up 0.1%, and Dow futures up 0.1%. That's where it's been all morning. The 10-year Treasury yield at 4.39% and the 2-year yield at 4.83%. Bitcoin is up 0.8% at 67,795. European markets also rebounding. The euro up 0.2% at 107.65 against the dollar. And that's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Futures up 8 here. We got a 0.2% move all in all. The VIX, look at the VIX after the bull market, the Apple frenzy yesterday. We've pulled back to 13.05 on the VIX.
And that's kind of where we've been sitting, Tom, down at 13, 14, 15 level. Not a lot of volatility or angst in the equity markets as we generally just move higher here this year.
12 minutes away from the CPI report, we will be commercial free. Nodding over to the 8:45 hour, we have had a sighting, Tracy Alloway and Joe Weisenthal, scheduled to be with us in the backside of this hour, and we are strong. We have Jim Bullard with us in the next hour. I can't wait to talk to him about the regime of this Fed. That's a word, a concept he came up with. Mark Zandi will be with us at the 8:30 report, and right now Ludovic Subran joins us. Chief Economist, Allianz, here on This Moment. Boy, Ludovic, the conversation this morning has been intense with a solid tilt that we are in disinflation. Are we?
Sorry, that was a joke, right? I think you have the expectation is 3.4% and services inflation has 5.2%. That is not called disinflation. I think the Fed has a huge problem, Tom. When we decompose the reasons behind inflation, a good 50 to 60% of it is due to loose monetary and financial conditions. And another 20% is loose fiscal. So imagine it's really a nightmare. So we still have one cut in December, but this cut is looking feeble and feeble by the minute.
Right.
So no, I don't think there is disinflation in the States.
This is what Bloomberg Surveillance is about, folks. We have an agreement to disagree. That is what makes up a market in the street. Paul and I have no idea what to do with GameStop. We argue about it nonstop. Ludovic, identify why the consensus economists in disinflation or nudging towards disinflation, what are they getting wrong in their analysis?
Well, first, the jobs report. I think the past, 4 to 5 jobs report, everybody was off by 100K. So that's a lot. So I think it's, again, the consensus of the next job report is 170,000 jobs. And, you know, the slowing in hiring, this reasoning around the local state not hiring and fading rapidly, whatnot, I just don't buy it. I do think that there is something that is very persistent, very sticky, and we need to be very careful. And so markets could be in for a surprise. Yeah.
Ludovic, are you in the camp that thinks the U.S. Federal Reserve is behind the curve and not cutting rates now?
Are you asking the global economist or the European?
Any way you want to take it, my friend.
Because if you're asking the European, we just don't want to cut too much because we don't want an even weaker euro. So I think it would be great that the Fed cuts in spite of the political momentum of the next 6 months. But yeah, I mean, to be fair, I wouldn't want to cut too fast if I were the Fed. So I don't think the Fed is behind. But for us European, you guys have to cut at one point. Otherwise, we're in a pickle right now. You know?
All right, Ludovic, give us a sense just from, I believe you're based in Munich, just a sense of how the European economy is right now and kind of what's the expectation?
It's amazing, you know, Macron just called for general elections. So really, I mean, it's you know, the political uncertainty just went up a notch. So, you know, the European elections were actually okay. There was a lot of continuity. I think the numbers from the first half of the year are actually not too bad, even though indeed there is a bit more of a recession tilt than an inflationary or stagflationary tilt, right? But the problem is indeed we are now these big elections coming up in France at the core of Europe, and the outcome is very uncertain. So markets are really in wait-and-see mode. And of course, as a French person, I'm very scared.
Ludovic, do you, when you talk about a Fed that's facing not disinflation, but some resiliency of inflation or permanence of inflation, fold that over to your guess and Allianz's guess on economic growth in America. The big surprise, Governor Bailey's talked about it in England, was things have been better than the gloom crew expected on economic growth. Do you suggest part of your yield call, your inflation call, is a more sprightly economic growth?
Yeah, I mean, if I look again from a very European standpoint, you guys have an overperformance of growth that can be explained by a looser fiscal, more migrants, so more demographic push, and productivity boom in your superstar firms. We don't have that. So I do think there is hardcore rooting into growth engines that are not going away. Look, it's an electoral year, and still we don't see any slowing down of disbursement on the public expenditure. So that, for me, shows that there is something stronger in the momentum of growth than we can see, for example, anywhere else in the world, including in the UK, by the way.
We say welcome to all of you, commercial free now, through this important inflation report in 7 minutes. We welcome all out on YouTube in a live chat, huge audience coast to coast and around the world. Paul, we got to say good morning to Sebastian, first-time viewer on YouTube.
Really?
And he wants to know, does he need to wear a suit and tie if he's watching Bloomberg Surveillance on YouTube?
Maybe.
And I said,
I should have worn one. That's I dress down.
Yeah, I to Sebastian, you don't have to watch us with a suit and tie on. You better keep your bathrobe on. We like that as well.
Ludovic, it is an election year here in the United States. How does that affect or impact the Fed, if at all?
Everything, I mean, if Trump comes back, I think the Fed won't be able to cut at all in 25. He's a triple whammy inflationista. Tariffs, certainly a lot more negative fiscal shock, and the discredit on the Fed. So I think it's going to be catastrophic for inflation. The reflation trend is huge. So for us, actually, when we show a forecast with like a blend, we call it constructive Trump, pragmatic Biden, but clearly that doesn't make any sense, where we have 5 cuts in 25. And then we have this path for policies in the US where there is absolutely no cut in 25 because of the reflation from Trump going full ballistic on his policy and not on his pledges on the campaign trail. Yeah.
Right. Ludovic, a very important question for Allianz. I did this. You can do this on the Bloomberg Professional Service, folks. I took the U.S. 10-year back 25, 30 years, and I did the great moderation, and basically we're out 5 standard deviations. The French oat is out even worse now with Macron and all, 6 standard deviations. Is there a permanence to that, Ludovic? When you talk to people at Allianz, a huge insurance combine, are you saying that these yields that we're at now have a new permanence to them, or can we revert to a great moderation?
I don't think we will revert to a great moderation because we're coming to the end of the big savings gluts. And so that's the big issue. Money will have a price. What we're sure, however, is that we're not going to stick to the level that markets are pricing now. I mean, if you look at the US, markets are pricing in something that is stupid, for the terminal rates. It cannot be above 4%. Is an economy growing 3%. So we're going to be certainly down 200 basis points or something, but we're not going anywhere close to the zero bound, unlike what Bernd Bernanke likes to say, which is we always go back to the zero bound sometime. But I do think the yields are very sticky this time. Yeah.
I mean, we're getting a huge response here. We have to make it clear here.
Okay.
That on the YouTube live chat, Colin of the Twins just emails in.
Okay, good for
and
him.
says he's not wearing a suit.
Yep.
As he's watching us. We got a guy out here who's wearing a Tottenham Spurs jersey.
Wow.
Joseph, thank you. Supporting the Tots. Continue.
Exactly. Hey, Ludovic, give us your view on what, at least I've heard a lot over the last several months about U.S. economic exceptionalism vis-a-vis Europe, maybe Asia, particularly China.
Look at Apple yesterday.
Exactly. How do you view that? Is that a real thing in your mind?
It is a real thing. I mean, if you look already, the U.S., this cycle compared to past cycle, fiscal saves everything. I mean, it's very interesting to see that the soft landing is a fiscal attribution. I mean, it's all due to the very large fiscal profligacy that was chosen as a path out of the normal hiking cycle, ending up with either a recession or a financial crisis. So there is exceptionalism in that way. I think the second exceptionalism is the productivity boom that we don't see anywhere else but in the US. This is due to superstar firms. So that really questioned a lot on competition and labor policies, the choices we made in Europe with partial furlough and so forth. Right. And the third thing is I do believe that there is apart from the demography, there is the sectoral specialization that is also very strong. If you think about the fact that the US became energy surplus country in less than 7 years, that of course changes the game when it comes to the situation we are in right now with rivalries everywhere. So there is something that is, a size effect that comes to the financial vortex that the US is creating. And yes, this is positive US.
Ludovic, this has been valuable. You've had a huge response out on YouTube. Thank you so much. Ludovic Subran, I hope we can call on you as we move to the 2 French elections of, I believe it's June 30 and July 7th. How many languages did you say Ludovic speaks?
7.
So how do you do that?
I don't know.
I can't even speak English.
Yeah,
I mean,
exactly.
It's like, I am the worst. I mean, Jane Foley, I think she knows Sanskrit. I mean,
probably. I know.
It's
well,
that
she's very
much.
smart.
We're 3 minutes away from this important CPI report. We're going to go dollar now before we swing back to a lot of economics here and what it means for the Fed meeting this afternoon. Jane Foley, does the dollar anticipate CPI? Can you see in dollar dynamics flows or interest rate differentials off of a CPI report?
Well, you usually can, and to be honest, this year you certainly have been able to. But I think for today, perhaps that potential impact has already been diluted by, of course, that really strong payrolls data that we already had, and by the perception that perhaps this number comes in too late, really, to change Fed officials' behaviour, at least for today. But of course, you've just been talking about Europe, and of course, the influence now that we're having on markets this week from France and the uncertainties there, perhaps have also changed that dynamic. Certainly for Eurodollar, which of course is a big part of the DXY dollar index. So today maybe a little bit less from the CPI index than we've had an earlier prints this year, but certainly still a really key number.
One question before we get to the report, and we'll continue with Ms. Foley of Rabobank. Jane, the ECB's out front, and it's got a feel of one and done. Are you more comfortable with one and done, or are you more comfortable with a Fed that's a slave to measured action?
Well, I don't really think any of them want to do one and done, because that will just really draw criticism that perhaps maybe that was a little bit too early for the ECB to go. I think they would rather have gone with a series of moves, because that's what we normally get from the ECB. So I think from the Fed and for other G10 central banks, they're going to look at the ECB and say, you know what, they put themselves in a corner, they signaled that they would move, and then the data suggested perhaps it would have been wiser to hold steady. And all of the other G10 central banks are going to be watching that, and I think caution is going to be the watchword for most of them.
Jane, stay with us. We'll get your quick interpretation of CPI here in 1 minute as well. Paul, there's 8 lines on ECO Go. You're better at this than I am. You and Pharaoh do this much more than I do. Which line do you care about?
It's interesting. There's a couple here, Tom. I think we'll look at the CPI ex food and energy month on month. That's looking for a 0.3% kind of rate increase month to month. That's same as last period. On an annualized basis, CPI ex food and energy year on year, 3.5%. That would be down just slightly from 3.6% last period. So that's kind of what the survey consensus is, Tom. And so those numbers are going to get.
How cool is this to bookend this with Jane Foley and then DeMarc Zandy?
Yeah, incredible. We get it. I mean,
it's the this
a
is
lot
what
of
it's about.
Smart people helping us kind of interpret some of this data and get a sense.
Well, they're
of
interpreting.
where we are.
You heard the debate there between Paul Donovan of UBS and Ludovic Subran of Allianz. A bit of disagreement, which is what makes a market. Our market now, futures up 6. Let me go to the 10-year yield as a benchmark, 4.39%. The real yield is what I watch, 2.10%, as we look at the CPI report of America. And, I love doing that because everybody's like, what's Tom doing about it? But Paul, there it is. It's the undershoot that Jan Hatzius at Goldman Sachs talked about.
Yeah, it's markets are just ripping here. So let's go to the numbers. CPI month on month. The consensus, ex food and energy, we're looking at 0.3%. It comes in at 0.2%.
Wow.
And on an annualized basis, CPI ex food and energy year on year, the consensus was 3.5%. 3.4%
Can you be sure, Zandy, Rich, can you be sure Zandy's medicated before we get to him? Paul, this stunning report. I mean, look at SPX, up 41 points on futures.
Yeah, exactly. So we've got markets, equity markets moving higher. The yields coming in dramatically. Look at the 2-year Treasury, down 12 basis points, 4.71 percent here, Tom. So a big move in the bond market, big move in the equity market.
Yeah.
You call out real average weekly earnings. It's up about 0.5% year on year, real average weekly earnings.
I mean, these are huge numbers to go year over year on hourly earnings from 0.5 to 0.8 is a huge lift. I'm just going to look at CPI because I'm old school, but even on core, we came in from 3.5 to 3.4.
Yeah.
Let me go through the equity market because that's what so many people care about. SPX up 0.8%, Dow up 0.6%, NASDAQ after the big day relative yesterday up a stick, up 1%. The VIX craters to 12.43. Huge deal there of a bull market. Our economic indicators, Paul doing a great job of slicing and dicing them. Our economic indicators are brought to you always by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support in future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. And I just can't say enough how we rely on Commonwealth for all of our economic work, led, of course, by Michael McKee. We're going to get to Mark Zandy here in a moment. We are commercial free at the top of the hour with the market surging. Thrilled to have Joe Weisenthal and Tracy Alloway in a bit after Dr. Zandy. Jane Foley with us here. Jane, just simply here, we do get the undershoot that a select anticipated. Does that clearly delineate a dollar weakness?
Well, what it really says, and we can see this already in the market reaction, is that the market now will be putting that September interest rate cut hopes really back in there. And that is what the market will now expect from the Fed later on today, that they will suggest that there will be 2 interest rate cuts this year, not the one that many people have been fearing. So 2 interest rate cuts is what the market consensus will be. We will switch our attention, of course, to the Fed on anticipation of well, what if they don't? What if they've already made their opinions before this data? What if they're only saying one? What if they're playing it really cautiously? So there's still going to be, some doubts, but certainly this number does point towards the possibility that the Fed has still got the option of doing those 2 interest rate cuts this year.
So, Jane, when you see an inflation print from the U.S. here like we see today, does that change your outlook for the U.S. dollar? And is there any interesting trades that you see vis-a-vis the dollar these days?
Well, in a way, it suggests because it's more likely that we will get these 2 interest rate cuts, it does suggest perhaps a little bit of softness for the dollar. But you can't look at the foreign exchange market in isolation like that. You can't look at the dollar in isolation. And if we go back, and think about what we've learned from France this year, well, we have learned that perhaps we should be more worried about France's fiscal position, that even if the far right don't get a majority in that French parliament, it's going to be really difficult for France to make significant progress in reforms that it needs to bring its budget deficit down. And that teaches us, well, we should be worried about Italy too. So I think this is the case, the veneer of the euro, which has been quite resilient this year, has really started to dull, which points towards a better dollar.
I can't agree enough, Jane. We're looking for remote. Me, Sweeney, Lisa, Michael Barr, Venice. We're thinking August, maybe into September. We'll bring Jane Foley along. Jane from Rabobank, thank you so much in London for perspective. DXY weaker by 0.7%. A beleaguered euro goes 107 out to 108.20. Futures up 40. The VIX craters, 12.26, signaling the bull market. Paul Sweeney was talking about the 10-year real yield implodes 11 basis points to 2.01%. We had a huge response the last time he was on. Dr. Mark Zandy joins us from Moody's. He was definitive in the great financial crisis for perspective and optimism on the American economy. Dr. Zandy, these results, which are the undershoot a select few talked about, do they finally show to a Fed a disinflationary America?
I hope so, Tom. I mean, it feels like all the trend lines are moving in the right direction. Inflation's coming in. The only thing that's keeping overall inflation from the Fed's 2% target is the cost of housing, the implicit cost of home ownership. If I were king for the day, I'd I wouldn't be looking at that. I'd be looking at inflation X OER, owner's equivalent rent, and we're there. So, hopefully the Fed takes solace in this, and they're not going to move today, but hopefully they move in the next few months. We need interest rates to come down.
Mark, I'm just looking at Bloomberg red headline across the terminal. Fed swaps fully price in quarter-point rate cut in November. Does that make sense to you?
Yeah. It feels like a preponderance investors probably feel like September is when they'll start to move, and by November, yeah, I think that very high probability that they'll have cut rates by that point in time. I mean, everything is where they want it to be, right? I mean, the economy's at full employment, 4% unemployment rate. The labor market has cooled off sufficiently, so wage growth has come in, which is consistent with getting inflation back in the bottle. You got inflation coming back in, in a very graceful way. Financial conditions are, I think they're right where they want them. The stock market is up, credit spreads are in, but the dollar is strong. You add it all up, it feels like they're there. They should declare victory and move on. So yeah, by November, I would be surprised if they haven't cut rates.
Out on YouTube, the live chat, a really smart observation. Thank you so much for this. I am glad I was able to roll over a bunch of CDs. And Paul, you've talked about this. If you get a Zandy disinflation in place, when does it finally crack that 5.X% money market
That's
fund?
why the Sweeney Offspring 1B, she was very smart getting into her CD at 5%. I'm very proud of her for that. Mark, are you in the camp that says maybe even that this Fed is behind the curve, that they should be cutting already?
Yeah, I would have argued that they should be cutting rates. I think they have achieved their objectives properly measured, and 5.5% federal funds rate target where we are today is just not necessary. I mean, there's a lot of reasonable debate as to, what the equilibrium rate is. The rate that's neither restraining or supporting growth. It's higher than it has been historically, but it's not 5.5%. So why such high interest rates when you've achieved what you set out to do? So in the economy, I think the economy is going to soft land. That's the most likely scenario, but the risks of it going off the rails are not inconsequential the longer you keep rates unusually high. So yeah, I would have argued that they should be cutting rates already.
Mark Zandy with us with Moody's. We will continue with them. We're commercial free this entire hour for you. Thank you so much to Commonwealth, to Cohn Resnick, to Interactive Brokers for their support of our discussion of economics. If you're just joining us worldwide on YouTube across this nation, a stunning report. It is what a few wrote about. Good morning, Goldman Sachs and Jan Hatzius, who really parsed this. I thought, well, what if it comes in with an undertone? Headline CPI 3.4%, came in 3.3%. Futures up 42. The Sweeney yield here, the two-year yield in 14 basis points, 4.70%. Paul?
Hey, Mark, what do you think the Federal Reserve is really keying on here, and what kind of message do you think they want to get across today?
Well, I think with this report, they have a strong case to make that interest rates are coming. I think they will still make the argument that they want to see more inflation, good inflation numbers, things that are inflation numbers are very consistent with their 2% target. But with today's numbers like today, which augurs well for the consumer expenditure deflator, which we're going to get here in a couple of weeks, which is what their target is based on. I think they want to signal that if another month, 2 or 3 of good inflation statistics, they'll cut. The numbers like this really makes the case very easily for a rate cut.
Okay, Mark, I'm looking at inflation back pre-pandemic, and we had immense stability. Core CPI, we were at 2%, 2.2%. The two standard deviation band, I don't want to get too mathy here, was extremely narrow, extremely predictable. We had an upset of disinflation, deflation down to 1.X% with the pandemic, and then boom, the stimulus up over 6% core CPI. I see almost, Dr. Zandy, an inertial force of disinflation now, almost with what I'm going to call convexity or acceleration in the form of disinflation. Explain to our audience why this central bank that you think should cut this afternoon, that's a joke, I'm putting words in Dr. Zandy's mouth, but Mark Zandy, why are they such a slave to an ex post strategy? What are they afraid of?
Losing credibility, Tom. I think they've got a target, the 2% on the consumer expenditure deflator. They feel like if they don't hit that target, they'll lose credibility. And credibility really is important. That's key to keeping inflation expectations down. People have to believe, investors have to believe the Fed is going to do, what it says it's going to do. So I think that's the motivation here. Now, having said that, I do think once they hit the 2% target and they do start cutting and they kind of rethink their framework for monetary policy going forward, that they should come up with a better mousetrap, that the 2% target on consumer expenditure deflator is probably not the target they want or the way they want people to think about it. So once they've gotten there, they've established credibility, then they really need to think about their framework and how they want to do this going forward. 2% is not the right number, and the PCE is not the right deflator.
Zandy, Paul, this is so important. You're going to see a tweet someday. Zandy, National Bureau of Economic Research, NBER. It's going to be a paper by Mark Zandy, the Fed, and the Better Mousetrap. That's where we're heading.
All right.
I like that title. Yeah,
exactly.
I like that.
Hey, Mark, what do you think about, when you see an inflation print like today, what do you think about the U.S. consumer? Because the U.S. consumer, if you go out there and ask the consumer out on the street in South Philadelphia or, Peoria, they're going to say, boy, I'm paying a lot for a lot of the key things I have in my cart every day. How do you think about the consumer these days?
Well, you're right. They're still feeling the financial pain from the surge in inflation that Tom mentioned back 3 years ago, particularly for staples, for food, for rent, for gasoline. But I do think the sting of that those higher inflation numbers are starting to fade and to continue to fade going forward, because look at food prices today. They barely rose on the month. On year over year, food at home is up 1%. Rents have been flat for a couple of years. Market rents have been flat for a couple of years. Gasoline prices are back down to $3.50 per gallon of regular unleaded.
Mark,
and wages are growing more strongly. So I think they should, there's no game-changing event here in terms of how people think about things. But I think with each passing month, they should feel better.
Dr. Zandy, you got time for one more question. I want to go to University of Pennsylvania and your inbred optimism on the American economy. Are we underestimating American growth given new productivity, new technology? Joe Weisenthal would say AI, EIO. Mark Zandy, do we underestimate American growth?
Very possible, Tom. I think a prudent planner would say, okay, we're going to grow 2% real GDP. I think that we should count on that. That should be baked into our budget forecasts and planning as business people and as government. But I do think there are risks on both sides of that. But I think there's a good argument to be made that the economy is going to perform better here than people anticipate. We did that last year in 2023. Much better than folks thought. A lot of folks thought recession. We got even not only not a recession, but a very strong economy because of those supply side benefits you talked about. And that could continue.
The heritage of our guests are important. Fantastic. I can't say enough, Paul, for how Mark Zandy was a nearly lone optimistic vote. Think spring of 2008. He was saying, we will clear the markets. Yep. We will do fine. On this. Dr. Zandy, thank you so much, always with Moody's as well. Here's a date calendar. Here's what we're going to do. We're trying to find Mike McKee. I think he's on the phone with, Powell.
Powell, just
somebody.
Exactly.
Somebody. So we're going to fall back on a better plan. Joining us now, Joe Weisenthal and Tracy Alloway. I'm going to sell Odd Lots, ginormous podcast. I mean, you should, you're in Sunset Boulevard and you get people.
I know.
They're on
That's how it happens.
They're down in Venice
That's
Beach.
Right.
Listening to Odd Lots. They're on Elon Musk this week, outer space, a huge miracle, SpaceX. I can't emphasize enough the success of this flight's a failure as they succeed forward. And they're also looking, because Tracy wants me to go on Ozempic. And I haven't yet. But they're looking at the new foods. But we've got to blow it up today. We got a Fed meeting today.
Yeah.
And we got a CPI report today. Futures up 39. Sweeney's 2-year yield is 4.70% and 14 basis points. Brent crude up a stick, $83. Let's just have a nice, normal, like we're at Jackson Hole conversation here. Ladies first. Tracy Alloway, have we now finally esteemed disinflation for a Fed's scared stiff?
Oh man, I'm going to do the cliche response and say I think it's too early to say, but I think the important thing from this morning's CPI reading is that Powell basically has ammunition to sound dovish at the presser later today. So you have the recent rise in the unemployment rate, the job openings. Those are all, and now the CPI, those are all things that he is now able to emphasize in a way that
so
perhaps
you're saying
a month or two ago he couldn't.
This report changed the press conference?
I think so, yeah. Maybe not the dots themselves, but certainly the press conference.
So, Joe, following up on Tracy's comments here, what do you think our Federal Reserve Chairman maybe should do or versus what he will do, do you think?
Cut him. No, I have no idea. But Tracy made an important point. Like, everyone's going to be talking about CPI today, and that's great news. But the unemployment rate hit 4% on Friday, and it's not the only labor market indicator. Probably softening is the right word. Jolts we also got last week, and it showed the decline in job openings. I think it's pretty clear that there's been some sort of deceleration in the labor market, and at some point you get a print like this, and that also gives you the permission, perhaps, is a way to put it, to pay attention to, are we at risk of losing that side of the employment mandate?
To both you, jump in here. Victoria Fernandez was with us yesterday from Houston. Joe, that's a town south of Dallas. I don't know if you know about it.
Interesting.
She's talking about the Texas boom, and they're going to have a Texas stock market and that. Just do we flat out, in our Bloomberg gloom, underestimate economic growth in America? Both of you, go.
I mean, I think the resilience of the expansion has surprised everyone. Like, that's not a secret at this point. I think maybe what policymakers in particular underestimated was just how much people actually hate inflation. And that's kind of what we're all internalizing over the past couple of years. People really, really hate inflation. In fact, like, there was a working paper from the Fed last week that kind of went under the radar, but they made the point, they did a survey, I think it was in June 2022 or 2023, and they asked people, do you prefer unemployment or inflation? And kind of rationally, you would expect that people want to keep their jobs, even if they have to pay more for items. 80% of people would prefer a higher unemployment rate than more inflation.
Joe, Robert, he's a goalie up at Hamilton College, young kid, young buck, just looks at the decimal. You know the silliness, they go out to 3 decimal points.
Oh yeah, the pros.
He says it was a 0.2% month over month statistic, and it came in rounded out at 0.16.
Oh,
so if that had gone 0.14, we would have had a 0.1%.
Wow. Yeah,
You never thought you'd see that from a hockey goalie, would you? But that's what you
hockey goalie is going out to the 3rd decimal. No, I mean it's pretty remarkable. It's pretty surprising. On the question of like whether we underestimate U.S. potential, I mean, like long term, how do you bet against the U.S.? I mean, just like realistically, just every turn. You know, we have everything here. We have the best chip makers, and we have all the land, and we have oil and gas. Speaking, what's that town you mentioned? Did you say Houston? I'm familiar with Corpus Christi on the coast. Is that like a little north of there?
A&M's got their oceanography school.
I've heard of it,
somewhere.
yeah. I think there's a lot of energy industry there. We got everything. We're going great.
Very good. Real quick, odd lots. What do we got coming up?
Oh, we have a bunch of really good episodes. So we have one out today about Elon Musk's various adventures in space. And I'd sort of seen the headlines about all the rocket launches and Starlink and things like that. But this conversation actually really solidified how much he's doing in that space, and also like how much of a departure this is for the way this has traditionally worked. Like traditionally it's been NASA, maybe with some private suppliers. Right. All of US space is basically Elon Musk now, and maybe a smattering of Boeing.
And speaking of disinflation, I mean, the cost of firing a satellite, strictly thanks to what Elon has done at SpaceX. How much is it down? Like,
I can't remember.
90%?
We were actually looking how much it would cost to like send a payload into space.
Don't even know. I've never even heard of a number about that.
You can look it up online.
Yeah, if you go to SpaceX, they actually have a request a ride feature.
Right.
It's only like $500,000, though. If you want to add some of the ancillaries, it'll get over
Maybe
$1
we
million.
can crowdsource.
It's too much here. I'm surrounded by bluegrass in one view and Joe Weisenthal and light sweet crude in the other. Are you doing any bluegrass tinge stuff? I mean, I got Robert Plant out with Alison Krauss.
Oh, yeah.
I mean, are you doing like a bluegrass homage within your sets on the tour?
You know what you got to check out? Check out the new album from Swamp Dogg. He's like been around forever. Who is a new bluegrass album? That's my pick of the week.
Joe Weisenthal, Tracy Alloway, thank you so much on a huge inflation report. Ian Lingen, who was looking for the 10-year to come down substantially in yield.
Boom.
CPI, super core unchanged, but core, and he goes to where Bob Degoli is, 0.163%. On odd lots, next week, they're going to 5 decimal points. He's been there. Joining us now, Michael McKee, as he prepares for a Fed meeting. Mike, seriously, and I don't want to front run your important question because I know it's timing. Does this report change the 6 or 7 players in the press conference, the questions they ask?
Well, it certainly skews them towards more of a timing of a cut than concerns about inflation not moving lower. So that story changes a little bit. Jay Powell is going to probably not change his answers all that much. He's going to want to say that we're leaving our options open. It probably means we're more likely to get 2 dots for cuts this year than for 1. But Fed officials probably aren't changing anything that they're doing today because this sort of reinforces their view rather than challenges it.
So, Mike, what do you make of this inflation print here today? Is this, I mean, I know you're digging underneath the covers. What do you find under there?
Well, it's a surprisingly good report because a lot of the categories that we had seen increases in that proved stubborn have turned around a little bit. Motor vehicle insurance, for one thing, down 0.1%. Airfares were down 3.6%. Gasoline, obviously, off 3.8%. We knew that gasoline prices had gone down. But new car prices down 0.5%. All this focus on used cars, and used cars did go up, but new car prices are twice the weight in the CPI as used car prices. So they went down by 0.5%. So there are a lot of areas where we had been seeing some strength that now showed a decline, and that's good news.
Will we see dissent today, Michael McKee, before we let you go?
Oh, I don't think so. I don't think anybody is prepared to say that they need to raise or cut rates today. We probably won't see dissent in July either. What'll be interesting is when we get to September, whether Mickey Bowman, who is the lowest dot on there and thinks we might need a rise, whether she thinks they still need the possibility of a rate increase.
Michael McKee, thank you so much. Holding court in Washington. The Fed decides this afternoon as well. So, Paul, here's the deal. Afterthought has a boyfriend. This is a new thing. We don't know what to do with.
How old is that?
Thor, it's been, I was the last to know. Don't tell Dad. So Thor's flying in.
Thor?
Thor, yeah, it's his name.
Wow.
So Thor's coming in. So I got to take off Friday and chaperone these idiots. So, you know, who's replacing me
Who's
Friday?
replacing you?
He's in training. Joining us now, my replacement.
Who
I
could
got
replace
both
you?
feet out the door.
I don't know.
David Cura.
Tom, good to see you. What's on the agenda? Statue of Liberty?
I was thinking Statue of Liberty. I think they want to go to Brooklyn. And
okay,
cool
well, I can give some guidance as much they need.
By Custom Blue Jeans as well. What are you doing on Quick Take right now? Every day there's a Vitality. I do in Europe and Macron. What are you doing?
Yes, we're working on that, but today there'll be something on the Fed. We've spoken with Dr. El-Arian about his call for a revision of the 2% target. He's going to make that case for us on the podcast today, and of course we'll dovetail that with the data that we got this
morning. Mark Zandy said that. Mark Zandy, you know, politically, Zandy carries influence. And he said, look, 2.0's got to go. And Paul, do we hear that today where they finally step away?
I don't know. It's be interesting to see. I mean, I guess, David, the interesting thing that we'll all be paying attention to this afternoon is just kind of the tone that Fed Chairman Jay Powell says.
The tone that he takes. And I said to Mohamed El-Arian, do you feel like you're the loudest voice in a small chorus? He feels like it's getting bigger. So to your point, Mr.
Now,
Zandy,
since
maybe
you
more
are
joining him.
replacing me on Friday, which means all the music is going to be...
How big are your shoes, Tom? I don't know.
It's going to be Ricky Skaggs and Milk Carton Kids.
Swamp Dog.
So for Swamp Dog... You know, Light Sweet Crude will probably play as well.
Acoustic set.
Yeah, I don't know. Maybe I'll show up Friday anyway. I'll bring Afterthought and Thor in.
Yeah, exactly. Give him a tour.
Well.
This is the real New York.
We got a huge market reaction, folks. Another leg up. The Dow up 300 points on futures. For David Gura, David, this is rock and roll. It's from before your time. Girls from Vancouver, Heart, Barracuda, just for David Gura. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Inflation in America surprises to a lower set of statistics to disinflation. Paul Sweeney and Tom Keene with you in moments. James Bullard will join us, a former president of the St. Louis Fed. Right now, all we can say, Paul, major market move. Futures up 47 points. Dow futures up 341 points.
Yeah, big moves in the equity futures, Tom. I'm looking at the yield space. 10-year Treasury off about 11 basis points, 4.29%. And on the 2-year, Tom, we're off about 14 basis points, 4.7% on your 2-year Treasury.
Right now, let's get to it from the Interactive Broker Studios with markets moving. A Bloomberg Business Flash. Amy Morris in Washington.
All right, thank you, Tom. And you're absolutely right. A cooler than expected CPI is boosting the disinflation narrative. It means a September rate cut may be back in play, and futures are higher, bonds are lower. S&P futures are now up 0.9%. NASDAQ futures up 0.9%. Dow futures up 0.9%. The 10-year Treasury yield at 4.29%. The 2-year yield at 4.69%. NYMEX crude oil up 1.6% or $1.31, trading at $79.22 a barrel. And that is your Bloomberg Business Flash. Tom and Paul.
Amy, thank you so much. It's equivalent to being in Austin fighting Longhorns and getting a job in College Station, Texas.
I don't know
You're
how
not
you
supposed to do that. I mean, it's stressful. We got so much to talk about with James Bullard, of course. Original is St. Louis Fed with all the research heritage of the St. Louis Fed. His PhD from Indiana University, and he's wearing a boiler-up Purdue pin today.
I know.
With this wonderful new challenge he's taken on. What's the difference between IU and Purdue?
Purdue is number 4 engineering school in the country, so it's MIT, Stanford, Berkeley.
Out in the Midwest.
Purdue, yeah. And so the medical school is down at IU, but engineering is at Purdue. So it's a great technical university, and the business school is aiming to combine even better than we have with the engineering school and get great graduates.
You're enjoying the private life.
Oh, I am, and it's going very well. It's great to be back on campus and around the students and hanging out.
I want to go back to, I believe it was 2016, and Dr. Bullard, you had a profoundly important paper saying, as Lagarde is saying at the ECB, we got to get off this idiot media micro-analysis of data and look at the regimes that we live in. As we go to this Fed meeting today within disinflation, with the Fed, with the ECB leading with the rate cut, for Jim Bullard, is there a new regime out there right now, post-pandemic?
I do think we've switched regimes. We're in a higher nominal interest rate, higher inflation environment, and I think that means that comparisons should be made more to the second half of the 1990s and the first part of the 2000s than to the 2009 to 2019 period, which was a low nominal interest rate, low inflation regime.
Paul wants to get in here. We're going to tie the bow here, if I can. It's critical. Is this the press conference where we get some form of hint or statement to where Bullard and Clarida are, which is away from the slavery of 2.0%? Do we get a higher, an understanding of a higher run rate for R-star or for inflation?
Inflation, no, the inflation target will stay at 2%, but inflation itself, I think the ideal policy would guide inflation to 2%, but asymptote, a word that you love, Tom, asymptote to 2%. So you want this gentle reduction in inflation right down to 2%. You don't want to be bouncing above and below 2%. I think you want this nice glide path into 2%. So hopefully that's what we'll get here. And this report today is very encouraging.
And so, Jim, there are folks out there in academia, in practice, in the marketplace that think this Federal Reserve is already behind the curve, that they should have already been cutting now. How do you think about that?
So I've argued that earlier this year. We did get tremendous reduction in core PC inflation in the second half of 2023. It was 4.8% last summer on a 12-month basis. It came all the way down to 2.8%. So in this world, in this game, 200 basis points of inflation reduction over 6 months or so is fantastically large. So you should be taking that into account. You should be reducing the policy rate, but the committee just couldn't find the right moment to do that because all the inflation reports up to now were mixed or even negative. So unfortunately, didn't find the right moment to do that. But this idea that the policy rate is a little too high for where the economy is today, I think makes a lot of sense. So I've advocated for like a technical adjustment. You know, you want to get this idea across that because inflation isn't near 5% anymore, core inflation, it's now under 3%, we can afford to reduce the policy rate, still be restrictive, and get this glide path into 2%, the 2% target.
I'd love to get your opinion on another topic that investors are thinking about, which is this is an election year. And what does that mean for the Federal Reserve as to timing? I mean, a lot of folks are saying you don't want to be too close to the election, so maybe September might not be the right time.
I think first of all, I don't think anybody ever won an election based on whether the Fed did something at the September meeting. So I don't think it matters for actual election outcomes. I don't think the median voter is voting on that. They're voting on much broader issues. So I think that the committee feels emboldened to do whatever it thinks is right at that meeting or any of the other meetings in the lead up to the election. And they have moved in the past during the election cycle, and I think they can do that if they wish this time.
When the Fed does begin to cut rates, how should we think about the next 3, 6, 9 meetings after that? How will they proceed in what may be a prolonged rate reduction move? How will that proceed, do you think?
I think it'd be slow. I think that, at least as of today, you would think that the inflation rate would come down slowly toward 2%, but it would depend on the data and what else is going on, as it always does.
I look at the Fed, and I'm going to be honest, Jim Bullard, you have prodigious economic chops. There's a few other people out there as well. But the fact is, on this program, we've had more than a few guests take a shot at a central bank that seems to be in love with non-economists. Do we need a representation at the governor's level and at the senior levels of the Fed that includes prodigious PhD macroeconomics, or can we go with a more generalist approach?
I think it's great to have a mix of voices and a mix of backgrounds on the committee. I think it really helps. You get too many people like me, and you get in too much in the weeds about analysis. But if you don't have enough of that, then you can't do a good job either. And so a good mix is the right way to go. I've learned a lot from my colleagues that have markets experience, and now there's a couple of new people coming on that have a lot of markets
Jim
experience.
Bullard with us. We continue. He's at Purdue, of course, at Cranert and White, the Mitch Daniels combine out there of their great graduate and undergraduate programs. Here's the history, and you're never going to admit it, but there was a rogue dot. There was dots.
D-O-T-S-O.
And you don't know which dot Janet Yellen was, but you knew which dot Bullard was because there was a rogue dot. Have the dots lost their meaning as you protested with your rogue dot? It could barely fit on a Bloomberg screen. Tom Secunda is over in Bloomberg LP aging because you ruined the dot screen.
That's well, it was a different era. We were talking about regimes earlier. It was definitely a situation where interest rates were low around the world. You had negative nominal rates around the world, and I just thought, why don't we just admit that we're in this low nominal interest rate, low inflation regime, and project based on that, and not try to project that we're going to switch.
Have the dots lost their sell-by date? I mean, is there any efficacy to the dots now?
I think there could be great reforms on the dot plot, but the committee has just not wanted to make those reforms. One thing that's very strange about the dots is that the horizon shortens up as you go through the year. So now you've got a dot plot that really isn't comparable to the previous dot plots, because now you've only got 6 months left in the year, whereas when you started, you had a whole year out in the future. So
I don't know this stuff. I think it's all just idiocy, and I don't focus on the dots.
It's a great function.
Save
dots
me,
go.
Paul. Paul, save me.
I'm trying to explain to my offspring, Jim, that about this is a more normalized interest rate environment. This is where most of the time this society, this economy lives, and they're trying to figure out how to borrow for cars and houses and things like that. Is this, in fact, where we're going to be for some time, do you think, this kind of general interest rate?
No, I do think we're in this higher interest rate regime, and I do think that it's better on the whole. If you think about the second half of the 90s, which was really the best period for the U.S. economy in the post-war era, that had interest rates like we have today, broadly speaking, and the economy can grow very rapidly. We had a great run at that time. And I do think you probably get a little bit better allocation of capital because it's more of a decision about is my project really worth it or not, and you don't get this kind of experimenting around with kind of projects that probably have low payoff.
Your West Lafayette, Indiana,
yes,
has a 3.0% unemployment rate. They're fully employed at Harry's Chocolate Shop. I mean, there's just no question about it. What does urban America, I mean, you and I have talked about this in your offices in St. Louis years ago. What is urban America missing about the vibrancy of the Midwest of this nation?
I think the Midwest is extremely powerful, very populous. It might not all be in one place like it is here in New York City, but really a lot of people, a lot of great manufacturing, a lot of great businesses spread out across the Midwest, and it's a great place to live. And that because you're more spread out, you have better housing markets and better options.
Is there a labor arbitrage still going on right now where, I'm sorry, we're gonna take the Biden investment program and that's where we're gonna find the jobs because the labor total cost all in is better?
There's a lot happening in Indiana. One thing that's happening is this I-65 corridor between Lafayette and Indianapolis. If you drive up and down that, you'll see lots and lots of businesses locating there. And we just had a deal with a South Korean chip maker that's going to move to West Lafayette to Purdue. That's a $4 billion investment. That's typical of the
Can you stay for a couple more minutes?
Yeah, absolutely.
Okay, Jim Bullard with us. He's going to stay with us. We've got to do the markets and the news as well. He's the former president of the St. Louis Fed. He boilers up now.
I know.
At Purdue.
I know. Serious engineering geeks out there. I know
they
that
are.
for sure.
They are.
Big
Little
time.
family heritage there as well. Futures up 48. You heard that right, 0.9%. Dow up 372 points. Levels 5432 on the futures SPX. We're not back to 40,000 on the Dow. 39,170. NASDAQ, we can begin to talk about NASDAQ 100 futures, 20,000. We're not there yet. In 13 basis points, a lower yield structure. 2-year yield 4.70%. 10-year yield plummeted to 2.01. We're back to 2.05% on the inflation adjusted yield. We'll talk to Jim Bullard about that when we come back. Paul and I are watching Brent crude, $83 a barrel. Will we get $80 a barrel West Texas Intermediate?
Exactly. I just filled up the vehicle yesterday down to Jersey Shore, $3.47 a gallon. I felt pretty good about that, but we'll have to see.
The gallon's coming down, but you got to believe it's coming up in the election.
I know.
I mean, no question. But dollar weakness, as you'd expect. Euro 108.24. We're with Jim Bullard. Stay with us on YouTube across the nation. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studios, I'm Amy Morris. A key measure of underlying U.S. inflation stepping down for a second month in May. A surprise for Federal Reserve officials looking for signs they can lower interest rates. S&P futures now up almost 1%. NASDAQ futures up 0.9%. The Dow up 1%. 10-year Treasury yield at 4.3%. And the 2-year yield at 4.7%. That's your Bloomberg Business Flash. Tom and Paul.
Amy Morris, thank you so much. In studio with us, the former president of the St. Louis Federal Reserve System, James Bullard. He of Indiana University. He of a profoundly important paper, I'm guessing 2016, on the regimes that we face within our monetary policy. Paul, I can report to you at his Purdue, at Harry's Chocolate Shop, right at the top of the menu, domestic cans, they have Budweiser.
I know.
Very important.
Well, Tom, I found another place we're going to have to go to. This could be a busy time for us there. Linwood Tavern
Yes.
Bar and Grill.
Yeah, I've heard. Rachel's mentioned this to me.
I mean, exactly.
3 days
the
a week.
Wabash River's right there.
You
There's a
study,
lot to
when
do.
you do all-nighters in mathematics,
Linwood
that's where
Tavern
you do
Bar.
them.
That's my kind of place.
Tavern. Jim Bullard with us. Jim, I got to go to monetary policy here and the measurement of the inflation-adjusted yield. As you mentioned, we had negative rates. Nominally, it was completely wacko when you were, doing the St. Louis Fed. We're now back to a 2%-ish 10-year real yield. Does that impinge on investment in America?
I think it does, like we were saying earlier, I think it makes people think more carefully about their projects. What is really going to pay off, and you get probably rid of some of the malinvestment or the misinvestment that might otherwise occur with very cheap money available.
Hey, Jim, to what extent does the Fed think about the consumer here? Because you think about the American consumer, we probably have at least two sets of consumers out there. The folks that are maybe, do have some assets, whether it's stocks, bonds, real estate, doing well, maybe even benefiting from a higher interest rate environment. Everybody else who may not have those types of assets or economic support, they're really feeling the impact of inflation. How does the Fed think about that?
Yeah, I think inflation is very pernicious and punishes the lower end of the income distribution very heavily, and you're certainly seeing that and hearing that when you talk to people in surveys. They do not like the inflation at all. They do not like the fact that the price level is up some 19% since 2021. And they're very upset about that.
One final question, blistering question. SK Hynix, they're going to invest in Purdue Research Park.
Yes.
The number one thing in the zeitgeist is America doesn't have the employees to be labor in those factories. Are you confident we can develop highly motivated, skilled labor as we perceive in Asia?
No, I think we'll have no trouble pulling in the right workforce for the South Korean company, and that'll be a major chip manufacturing facility. We've tried to reshore a lot of our chip making, as you know, across the country, so this is part of that effort.
Jim Bullard, two future governors of the Federal Reserve System, Constance Hunter and Julia Coronado, are here. On your way out, say hello. You're hugely qualified. Jim Bullard, thank you so much. Greatly appreciated with the St. Louis Fed. It is just an extraordinary day here, folks. To summarize, inflation coming in lower. Thank you to Bob from Hamilton College for the 3 decimal take that really gets you down to a disinflationary statistic, and we see it in the markets. Futures up 47. The real yield was 2.15. It came to 2.00, now 2.05. So lower yields across the board, and I really can't say enough about Brent crude out $1.29, $83.21. This is a joy. This is something Paul's demanded that we get from MacroPolicy Perspectives. Constance Hunter in here with Julia Coronado, and to have them, Paul, on this day is just, I just think that killer. Julia, does this shift Powell's discussion of the character of our disinflation, this stunning report?
I think it's an important report. I think Chair Powell is likely to express some optimism that progress has resumed after a disappointing first quarter, and that the plan to lower rates is on track. We think that they'll come out with a 2-cut baseline. This report sort of solidifies that. We think that Chair Powell sort of has that control over the median and the message. and that he can sort of credibly express optimism, say that we saw some broad-based progress in today's report after a decent April. So if we get a few more prints like that, then they can begin a process. The Fed is now having to deal with the decision of, do we start early so that we can go slow, or do we wait till weakness arrives, which is the track record of central banks, right? Wait till weakness arrives and then cut quickly. This is a new approach, or a relatively untested
She's laughing
approach.
at me because she knows I'm going to go mental.
Yeah.
Paul, save me. Put the surveillance cork in my mouth. Paul, save me.
Constance, there's a lot of folks out there that says this Fed is already behind the curve, that they should be cutting already. Do you guys, how do you think about that?
I think that that is a valid perspective. But of course, there's people who are saying that there's going to be no landing, that the Fed isn't going to cut at all this year. So I think I understand the perspective of the Fed of deciding to wait, given the prints that we had in the beginning of the year, and given the fact that we're seeing anomalies in the CPI data that we didn't see prior to the pandemic. And so I think from their perspective, caution is the better part of valor. On the other hand, as Julia said, historically, they are late. And so I think that they do run that risk. Fortunately, the jobs print last week was stronger than expected. But our big concern, if they're late, is that labor market starts to weaken. And once you see that, it's too late, because it is at best a coincident indicator.
Right. And Julia, Joe Weisenthal from Bloomberg Odd Lots podcast just moments ago said, raising some concerns about the labor market here, that 4%, you got to pay attention to that kind of number. So how do you feel about the labor market?
Yeah, no, I think that the May employment report was truly mixed, right? The payroll number is strong, it was broad-based, but the household survey is showing rising slack. You have to take that message at face value. The fact that we have gone from a low of 3.4 to 4.0, it's still a low unemployment rate, still a healthy job market, but it is more balanced than it was before. There are risks on both sides now. And as Constance said, if you keep restrictive policy in place for too long, then you're going to lose that resilience. So even actually Governor Waller said this earlier this year. He said, the low-hanging fruit of bringing down job openings, without a rise in unemployment is probably behind us. To really see a decline in labor demand from here, you're going to get that alongside a rise in unemployment.
Yeah, we're going to come back. It's just a joy to have Constance Hunter and Julia Coronado with us. But Julia, I got one fundamental question. Are we more than ever, John Edwards in Louisiana, as you were studying in Texas, are we more than ever two Americas? And the idea of aggregate analysis at the Eccles building is just quaint.
I think there are always lots of Americas.
But is there more now? Is it more polarized now in terms of
politically?
paycheck?
Absolutely, we're in a very
Economically?
polarized. Economically, no. I would say, Tom, actually, the good news is that we're less polarized economically, in a sense that the lower wage workers had the best labor market they've seen in generations this cycle, and it hasn't cracked yet. Really, the weakness we see in the labor market is at the top. It's the professional service sector jobs that are experiencing the weakness. So no, I would say actually we've seen a narrowing in wage inequality this cycle that we haven't seen in 30 years.
It's just a bang-up day here, folks. You have Jim Bullard with us, the former president of the St. Louis Fed, and here for a half hour, Julia Coronado with us, and Constance Hunter of MacroPolicy Perspectives to get us towards the Fed meeting this afternoon. Most importantly, at 10 o'clock, Paul Sweeney will drive forward with Alex Steele. I mean, you got something to talk about after this inflation report.
We got again a very interesting inflation report. Something very important for the Fed to take into consideration here as we hear from the Fed. And you're going to have full coverage this afternoon, right, Tom? Starting.
Can I go odd?
Sure.
Mexican peso weakness.
Oh, boy, I don't know where to go there.
Is just stunning.
Yep.
We have Julia Coronado in the room. You think we should go all Mexican peso on
do that.
Yeah.
Well,
there it is.
That's political risk for you.
Yes, exactly. And the bond market action we saw in France yesterday, on just a rumor, there's a lot of uncertainty.
We're going to come back. Dr. Coronado, Constance Hunter with us. Just thrilled to have them both with us. Futures up 46. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 9:29 on Wall Street, waiting for that opening bell on the New York Stock Exchange. From the Interactive Broker Studio, I'm Amy Morris, along with Tom Keene and Paul Sweeney. Want to check out the Treasury in the wake of that CPI data. There's your opening bell, showing cooling inflation and the possibility of a rate cut this year. The 10-year Treasury now down 3% at 4.28. The 2-year down more than 3%, 3.2%, now at 4.67. And let's check those markets at the open. The S&P 500 gaining 0.9%. That's 0.9% or 45 points, now at 54.20. The NASDAQ up 0.9% or 153 points, now at 17,495. And the Dow up 0.9% or 333 points at 39,062. Definitely reacting to that CPI data. Checking the markets for you all day long on Bloomberg Radio. I'm Amy Morris. That's your opening bell report. Tom and Paul.
Amy, thanks so much for the lift here. We'll keep you abreast here of a Dow up 320 points. What a joy to have us here for a half hour. Julia Coronado and Constance Hunter of MacroPolicy Perspectives. Constant, you know, I love Neil Duddy. He doesn't mince words. May I quote, Paul?
Sure, let her rip.
It does not take a rocket scientist to figure out what needs to be done.
Yeah.
And he's like, let's go. Fed needs to get on with it. Constance, what are they waiting for? I mean, I get it, they're ex post. You know, we all know this. Can we really hope for a new regime where they get on with it?
I mean, one thing that is going to hold them back is that shelter print. Now, that was isolated to New York rents, which went up and played an oversized part.
No.
But
how much did 2 blocks in New Jersey play? Paul, step in here. Are you telling me national inflation was Paul Sweeney's housing fault?
I think it was Paul Sweeney's fault in particular, yeah, he's to blame. You should get all the hate mail. No, but seriously, they're going to need to see that shelter number come down a bit. And, you know, but I don't disagree. Look, September has to be firmly on the table. The markets believe it's firmly on the table. And even a Fed that's a little bit behind should be able to move in September.
Joey, how do you think about the U.S. consumer here? Because we're getting inflation's coming down, but it's still at that high reset level, up 19% versus 2019. How's the U.S. consumer doing today?
Look, I'll reframe it this way. We should thank the U.S. consumer, because one thing we keep hearing in earnings reports and in the Fed's beige book is that consumers are price sensitive again. When we look at things like goods prices, broad-based deflation, consumers want deals, and they're getting them on cars, on furniture, and on apparel this month. So
on airfares.
Airfares plunged. So consumers are back to that norm that they had before the pandemic of, to part with my money, you're going to have to offer me value. And that is helping restore healthy inflation dynamics. So they might still be grumpy from what we've all been through. And we also, as Tom had alluded to, see a lot of polarization in those sentiment numbers. But, you know, the reality is that consumers have taken control back. That pricing power that companies enjoyed during the pandemic has evaporated, and now they need to deliver value. So some of those margins are going to get pressed.
We had a GDP number first quarter. Where are we? 1.3, 1.4%, whatever. Atlanta GDP balloons out 4%. They bring it back. Now we're running. What's the run rate to both of you? Do you guys argue about this? What's the run rate on real GDP? Are you that far apart, the two of you?
I don't think so. I think we're both at about 2.4, 2.5. I mean, you have to look at GDI. When you look at this, and last quarter was really trade and inventories, right? And so the question is, how much are those inventories going to be rebuilt? That's a very tricky thing to forecast. And then obviously we have the strong dollar, which is hurting trade in some respects, but we also see tailwinds from the global economy that we haven't seen for 4 years that could slightly help our trade numbers.
I mean, it comes down to domestic final sales. What's 12 months for? I mean, Julia, you were at BNP Paribas years ago making headlines on this. What's domestic final sales look like 1 year out? Don't give me this gloom stuff.
No, it's not gloomy. I think we're both very constructive on a better productivity cycle, not just because of AI. AI hasn't even begun to enter the room yet. This is about a healthier labor market.
Well,
it's entered entered the stock market room, but not necessarily the productivity numbers. We've had a strong investment cycle. We've had a good labor market, good matching of employers and employees. And we're not deleveraging. Last cycle was all about deleveraging and global fragility and financial fragilities. And we have strong balance sheets and a healthy, broad-based economy. So I think we are pretty constructive that we've got a better productivity trend. We've got immigration, at least for now. That's going to be a big policy differentiator in 2025. But for now, the U.S. economy looks like it can run, above 2% and not generate inflation.
Apple's up 9% since the gloom of the AI presentation.
Exactly. That's
209.
This is just the AI bump that everybody was looking for, and they got it
You
up another
told me
1%
not to
today.
buy. You told me not to buy.
I probably did. Too expensive, but here we go, up higher again.
Hey, Constance owns NVIDIA, so.
There you go. Very good. Very good for you.
For a while, actually.
Good for you.
Now I need to start trimming that position.
Just keep loading it up by the momentum. Constance, what would you like to hear from the Fed chairman today versus maybe what do you think we will hear from the Fed chairman?
Yeah, that's a great question. I mean, I'd like to hear him say that as long as inflation is making progress towards 2%, that it will be appropriate for them to take away some policy tightness. And let's remember, where is our star? Let's say it's higher. Let's say it's 3.5, right, instead of 2.5. Let's say it's there. They can start cutting and still be restrictive. And so I'd like that message of we can start cutting and policy will still be restrictive.
Okay, so economic historian from the University of Texas, is there any heritage that we do that besides a Greenspanian measured after the fact? I don't observe it. I mean, Richard Timberlake at Georgia or McKee at Dallas Fed years ago, no.
Yeah.
There's no history of what Constance Hunter just said.
History of what you just noted is Greenspan, is the mid-90s, mid and late 90s, where they kind of ebbed and flowed the Fed funds rate. It went up, it went down, it went up, it went down, and without a recession. And it was about fine-tuning and keeping the expansion.
Does he have to address that today as Lagarde and Company
He might.
addressed it at ECB?
I certainly hope that the Bloomberg reporters in the room ask him that very question, because they need to have a strategy. That's the one they've been communicating.
Rich, take a memo. Coronado wants to tell McKee what to say.
Well, and you brought up McKee, and he was the one arguing for the productivity revolution. He was the one arguing, saying we're going to be getting productivity, and we need to make sure that we don't raise rates into this stronger GDP, because if you recall, in the second half of the 90s, GDP started to gain momentum after those 3 rate cuts, while inflation fell.
The 90s, late 90s were very good to me.
They were good times.
I don't remember. I'm too young.
So, Julia, I've been trying to explain to my kids who are in the workforce now that this is a more normalized rate environment. The zero stuff we lived through before.
Yes.
Is that kind of where we are now?
Yeah.
Are we back to normal, I guess?
I hope so. I mean, I think we're in a positive real rate environment. It looks like the economy can handle that. So I agree our star is probably higher. That's where we wanted to end up, right? That's what the whole idea of the last strategy review at the Fed was about, engineering a somewhat higher run rate on inflation and gaining some policy space. And I think signs are that that's exactly where we're heading. That will give them better trade-offs. I know, I'm going to say this and people's heads are going to explode. We've got a better mix of fiscal and monetary policy now. Of course, 6% deficits are not sustainable forever, but what we have had is better state and local government, better fiscal participation. The Fed isn't carrying all the water for the economy.
You guys aren't allowed to travel together for safety, but have you guys talked about how you adjust your Fed calls seriously to the end of the year? Did you make a switch this morning? Will you publish for MacroPolicy Perspectives some switch this morning?
I think what we've been flagging for our clients is that the outcome of today's meeting and the tone and the tenor is going to depend on this morning's data. It is an important data point, and if we get what we were below consensus on inflation, it came in at our actually even a little bit below our forecast, but that would lean towards a more positive, constructive message that we're going to start in September. So I think that that's where we're at. The data has ratified that orientation, and now it's up to Chair Powell to deliver the message.
And Paul, Ian Lingen is a third of a way to a stunning call in the 10-year yield. 4.28%.
Yep.
I'm not saying it's going to drive lower, but that's what BMO Capital Markets is saying.
Yep, exactly. So where's Constance? Where are you guys thinking about GDP this year and next year? How's this economy going to be growing?
Yeah, so we had originally been thinking we would have a soft patch this year because higher rates would begin to take a bite out of growth. And now we're thinking that if the Fed can act and that in time, that may be able to be avoided. And part of the reason that's going to be avoided is this productivity story that Julia was talking about earlier, right? And all of the aspects of that are playing out in the economy. So we're looking for a little softer than last year, and then a little bit of a pickup probably in the second half of 2025 as lower rates continue and feed into growth story.
Way too optimistic. Constance Hunter, Julia Coronado, MacroPolicy Perspectives. Can we do this again? This has been great.
Yes,
Thank you.
absolutely.
Thank you so much. Huge news flow this morning, folks. The Dow up 283 points. NASDAQ up a full stick right now, up 1.1%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul Amy, Secretary of State Antony Blinken, said Hamas demanded several changes to a ceasefire proposal that go beyond the group's previous stance. It cast fresh doubt about the chances for a deal anytime soon. Blinken told a briefing in Doha Hamas's position means the war will go on.
Hamas has proposed numerous changes to the proposal that was on the table. I believe those gaps are bridgeable. Doesn't mean they will be bridged. We are going to continue to push on an urgent basis with our partners, with Qatar, with Egypt, to try to close this deal.
The war began after Hamas militants stormed into southern Israel in October, killing 1,200 and abducting 250 others. House Republicans want the tapes. The full House is expected to vote today on whether to hold Attorney General Merrick Garland in contempt of Congress. While the transcripts of President Biden's interview with the special counsel investigation alleging the mishandling of classified documents have already been made public, GOP lawmakers want the actual audio recordings of those conversations. The House Rules Committee yesterday voted to move it to the full House. Republican Congressman James Comer of Kentucky expressed concerns that the transcripts may be inaccurate.
It is insufficient to simply take the Justice Department at its word that the transcripts have not been altered.
However, Democratic Congressman Jamie Raskin of Maryland said Republicans' previous attempts to go after Merrick Garland have gone nowhere.
They want to listen to the book on tape in a last-ditch attempt to blame a cabinet member for the spectacular failure of their laughingstock impeachment drive.
Congressman Raskin and other Democrats say Republicans just want the audio to use in anti-Biden ads. French President Emmanuel Macron has ruled out resigning after the snap elections. Macron called for them after Marine Le Pen's national rally handed him a crushing defeat Sunday in elections for the European Parliament. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Amy.
Thank you, Michael. It's a Tom Keene tradition that when things are up, let's find something gloomy. Paramount.
Oh, boy.
Paul, it just gets worse. Brief our audience. This is one person saying no. Is it that simplistic?
Sherry Redstone, who is the owner of the control stock, the super voting stock at Paramount, has said basically doesn't want to sell to Skydance, and therefore the stock is off about 1.6% today. So apparently that deal with Skydance, which they were into the very final stages of negotiating this deal, the independent committee of the board of directors was actually going to vote yesterday, when at the last moment she said, no, I don't want to do a deal. So here we are, stocks down. Nobody.
I mean, it's going back to the lows of March. We're not there yet.
Yeah,
but
so
this is a disaster.
It's a disaster. It's a real mess, and they've made a mess of the whole process. It's tough to do these things when you've got a control shareholder. You're kind of at their whim, and here we are, back to square one. So we'll see what the company does.
We'll follow that. Lucas Shaw, of course, following this. I can't say enough about his newsletter, and he's putting together an event of some type out in L.A. He's already got some great voices lined up. Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Amy Morris. Stock futures climbed, bond yields tumbled, signs that inflation is cooling bolstered bets that the Federal Reserve may cut rates this year. And of course, we'll hear from the Fed in just a few hours. But right now, checking those numbers for you, the S&P is up 1%, NASDAQ up 1.5%. The Dow up 0.8%. The 10-year Treasury yield is 3% lower, now at 4.27. The 2-year yield at 4.68. And that is your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Paul, it used to be easy. You know, you're Kalamazoo or DePaul.
Yep.
You read Sheldon Natenberg cover to cover, and you learned all your Greek letters. You learned, you know, the usual delta, alpha, beta. You learned theta and vega and the rest.
Oh, boy.
And then you could do options trading that was conventional. You could do that at Bear Stearns. You could do it anywhere. You do option overlays.
Oh, boy.
Can you imagine doing that today in this hyperkinetic? I don't even know what gamma is anymore.
No, I do not.
But in the trenches of options is Joe Mazzola at Charles Schwab. I'm sorry, Paul, it's not the same as it was even 5 years ago.
No, it's not. And Joe Mazzola, but, you know, he is the head trading and derivative strategist for Charles Schwab. Joe, thanks so much for joining us here. Busy day today on the economic front with the CPI print. We're going to hear from the Fed later on today. What are your clients at Charles Schwab? And when I think of the Charles Schwab company, I just think gajillions of clients out there. You guys get a great feel for what investors are thinking. What are you hearing from your Schwab clients these days?
And by the way, Tom, I read Natenberg probably 5 or 6 times. So yeah, you got me covered there.
It's such a good book, Joe. It's such a
is.
good book that you read it exactly. Just quickly here, Paul, I don't want to interrupt the great question. One day, they go, there's a guy up in the food court with like 6 pens and pencils in his court.
Yeah.
And Sheldon Natenberg came to see me. And I was so humbled to see the giant of Chicago. Paul, I'm sorry.
No worries. So, Joe, what are you hearing from your clients these days?
Sure. Well, you know, clients were buyers in May. They were net buyers at the stock level. That pushed our Stacks indicator. So for those of you unfamiliar with Stacks, it's our Schwab Trading Activity Index. It measures client activity, right? Their behavior. So it's not kind of what they're saying, it's what they're doing. And I think, you know, anytime you can get that type of data, it's helpful from an investor and trader perspective. So we saw a little bit of a bump in May. I wouldn't say anything substantial, but I do think that there was a couple caveats that really kind of stood out to me. Number one, while that number did tick up, it ticked up at the net level, right? So net buys were higher than net sales. But we did see a little bit of a drop in the dollar value. So I thought that was interesting. And kind of the way I read that is that some of the larger accounts, you know, were maybe selling into some of the strength, whereas maybe some of the medium to smaller accounts were buying the dip. So I thought that was interesting. Something else that kind of really caught my attention was there was a lot of fixed income buying. And then I would say, you know, the final thing that really surprised me was our largest sale was actually Apple. And I know you guys were talking about that in the last segment, but yeah, clients sold the strength into Apple towards the end of May.
Interesting. Are they still buying some of the big large cap, high tech, high growth companies like NVIDIA, like Amazon, those types of names?
That is the theme, Paul. You know, on the dips, they're buying the mega caps. It's whether it's an AI theme or whether it's maybe some of the complementary stocks that deal with AI, as you mentioned, Amazon to a certain extent. You know, the biggest buys that we saw were NVIDIA, AMD, so those are your picks and shovels, right? And then some of the complementary plays, Microsoft, Amazon. So these are some of the stocks that we continue to see bought on dips. And that was the case that we saw in May. And as I mentioned, it was a bit surprising to see that Apple was at the top of the list because that's continued to be a retail favorite, really, for multiple years, especially here at Schwab. And some of the other sales that we saw, along those lines, we did see Alibaba was one that had rallied about 15% kind of into earnings and then peeled back after earnings. So clients did a decent job of calling the initial peak there.
When's the last time we talked about Alibaba?
Yeah, exactly.
I think it was like
right.
2015. Paul, jump in.
How about Tesla? I see that as one of your lists on your buy list, and stock's down 30%, but the retail investors are still paying attention to that name, aren't they?
Yeah, if you look at Tesla basically pulled back to a 52-week low at the end of April. Got a little bit of a boost from the news of the lower production or the lower cost model, going potentially into production in 2025. So I thought that helped the stock, and I thought that buyers gravitated towards that. Also, the announcement out of China that the autonomous driving capabilities of Tesla has kind of pushed them forward as the only foreign automaker. So, that was potential to give it a bump. But honestly, my take is it was really more of a technical buy, looking at a chance to buy the lows.
Joe, I got 30 seconds. I'm sorry for that. Are the meme stocks harming our confidence in Wall Street?
I will say this, and I think this is important, Tom. The meme stocks were not at the top of the list for the overall client level. Where you did see some buying into that was at the millennial level. And there was kind of a bifurcation between maybe the overall client base and the millennials. They dipped their toes into GameStop. That was one of the top 10 buys for the millennials. Is it hurting? We haven't seen the type of volumes that we saw in 2021, and we look at that in terms of the Stacks report. It's not getting to the level of the leverage that we saw in 2021, but it is bringing some attention to the fact.
Joe, thank you so much. Joe Mazzola, thank you so much with Charles Schwab this morning. G7 starts tomorrow on assignment. I love this, Paul. Quote, at the loveliest, prettiest hotel in the Mediterranean, joining us from Puglia in the Borgo Exaze, I'm ruining the pronunciation. It's this ginormous, gorgeous hotel. On assignment is Anne-Marie Horton. Anne-Marie, I want to get before G7 and the president's visit to talk to you with your immense perspective on what we're seeing in France. On a yield basis, I'm out 6 standard deviations, price down, yield up. Your thoughts on how we get from June 30th to July 7th and beyond in France?
Well, it's a great question because Emmanuel Macron is going to show up here in Puglia as a weekend leader. He had to come out today in France earlier this morning to say that he is not even going to resign because all these rumors were swirling around yesterday that potentially he would resign if he was dealt another blow at the legislative election, that snap election that he had to call after his party was dealt a massive blow after the European parliamentary elections. So like Emmanuel Macron and also like Olaf Scholz, they are showing up to Puglia under immense pressure domestically at home. And those domestic concerns are really painting a cloud, a picture of a little bit more of gloomy and fraught negotiations as they try to act as a group when it comes to things like making sure they can boost Ukrainian defenses and boost a commitment to those sovereign assets that are mostly held in Europe, the interest payments on them, or rather the future interest payments on them, so they can get a loan of liquidity into the country for restructuring. These are very challenging and difficult negotiations given the backdrop of some of these leaders, but not given the backdrop, we should note, of Giorgia Meloni.
Anne-Marie, what's the agenda or the to-do list for President Biden and the American delegation in Italy?
I think for Biden, it's really going to be about trying to make sure they can actually announce this plan. You know, Zelensky is also going to be here. Right. The United States were the ones that actually wanted to seize the asset, not just make them immobilized, but actually seize these Russian assets. And they want to see an agreement amongst all the G7 countries, because if they act together, it's actually safer. The issue when it comes to these Russian assets is that they are under sanctions in the European Union, and those sanctions get renewed every 6 months. Hungary will be hold the presidency starting in July. What if one nation out of the 27 decides they don't want to renew the sanctions? If all these countries sign up to give Ukraine more money in hopes that they'll get the interest payments back at a later date, they want to be made whole again. So for Biden, that is going to be key. And also just really making sure that he does like he did in Cornwall in the United Kingdom in his first G7. He wants to show that America is back, but that's very challenging when many Europeans view the U.S. election as a coin toss in November.
Okay, Anne-Marie, thank you so much. Anne-Marie Horton for the next 3-4 days, the G7 meetings in southern Italy, Puglia, Italy. How do you get to 10 a.m. after the show?
I don't know.
There's only one way.
Of course.
Blue Oyster Cult. You too young to remember Blue Oyster Cult. They influenced Springsteen.